sales. And the reason that average tickets are coming down is because you don't have the same leverage to big ticket spending, those categories I mentioned earlier, like flooring, like cabinets, like countertops. Those are some of the things that really drive that growth. And with that pullback, we've seen a moderation in ticket.
We're talking about the sales declining for a fifth quarter in a row. When does that break out? Is it just easing comp numbers going to ultimately lead to a rebound?
So that'll be part of it. I mean, the way we're looking at the market is that the second half outperforms the first half. I think Home Depot and the industry can start to return to growth later this year, kind of exiting 2024. And we think once we look ahead to 2025, that's when you start to see a more normalized growth environment in that low single-digit range, call it.
All right, so Home Depot, they're primarily a U.S. company. Did any of these companies think about opening stores outside the U.S.?
Yeah, they have. I mean, both Home Depot and Lowe's have had businesses outside of the U.S. Lowe's recently sold its business in Canada. Home Depot operates in Mexico as well. But for both of them, they've both made an effort over the last several years to really focus on the U.S. market. So that's been a strategic initiative for both of them, just because they see that long-term growth in the housing market, and that's really where they want to focus their attention to.
All right, Drew, great stuff as always. Appreciate getting some time. Drew Redding, he's a home builder analyst at Bloomberg Intelligence, joining us via Zoom from the Bloomberg Intelligence headquarters in Princeton, New Jersey. Again, Home Depot putting out some numbers here. Stock, not really up a little bit, but here again, if nothing else, the comps have to get easier. But it's tough comping over those pandemic years when people pulled, you just know they pulled a ton of spending forward.
Exactly, and as Drew was saying, when it's the consumer like myself who's out there maybe making a small adjustment, repainting a room, or going out and buying a new screwdriver or electric power tool, you did that when you had free money.
Exactly. And if you're John Tucker, you're still rebuilding the palace down there at the Jersey Shore. Can't wait to see it. We're going to have more coming up. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks kicking off the new trading week lower. The Nasdaq down more than 1%. The S&P 500 down about 0.5%. Dow is little changed. The 2-year yield is lower at 4.55%. The 10-year yield lower as well at 4.25%. And the 30-year at 4.42%. Commodities, NYMEX crude $78 a barrel. Brent crude at $82 a barrel. And I want to check in with the 11 major industry groups right now. The biggest drag coming from information technology, specifically semiconductors, semiconductor equipment. If you look a little further under the hood, we have NVIDIA at the top of that list. They're down about 5% right now, and that's followed by advanced micro devices and also Broadcom. Now we'll get NVIDIA's results tomorrow after the bell. That is your Bloomberg Business Flash. Paul and Bailey.
All right, Lisa Mateo, thank you so much. We appreciate that. Bailey Lipschultz sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. We're also in your dashboard with Apple CarPlay and Android Radio, so kind of get us everywhere you need to get us. We're there. Let's take a look at the restaurant business. I don't know about you, Haley, because I don't know, I eat out a lot.
Yeah?
That's a big part of the...
You a high-end eater? Are you a fast food guy?
Not a fast food, but, there's so many good places to go down where I live. So anyway, we go out a lot. But I know if you got, kids and stuff like that, you're not doing that so much. You cooking at home. But I like to turn to Michael Halen to get a sense of what's happening in the restaurant business. Michael Halen, Senior Restaurant and Food Service Analyst for Bloomberg Intelligence, joining us on Zoom from HQ for BI down in Princeton, New Jersey. So, Michael, let's start high-end here. Give us kind of the trends here over the last couple of years coming out of this pandemic in terms of how much people are spending on restaurants these days.
Yeah, obviously there was a couple of tough years due to the pandemic, mainly for the full-service restaurants due to, limitations on hours and different regulations on indoor dining rooms, also just apprehension by customers. But there was a pretty strong bounce back in restaurant sales in 2022, and then they kind of got hit with that margin pressure, right? 2023 started off pretty strong. In early 2023, we were lapping Omicron, so the comparisons were very easy. So early 2023 was very good. Sales started to slide in the second half of last year, and they're really, now that they're lapping those strong comps from a year ago, we saw some real weakness in January and so far in early February.
And when I look at, Michael, when I go to the fast food restaurants, when I do eat out, Paul,
Yep.
I'm a cheap guy. Prices are high. I go to Chipotle and it's costing me $17. Whoa. How do price hikes and expanding margins, how are those things playing out, and how are those going to continue to play out in 2024, given this uncertainty around consumers maybe tapering some of this spending?
Yeah, that's a great question. There was a lot of ruckus really online over the $18 Big Mac meal in some locations last week. So, this is something that we're looking at. And, same-store sales were so weak in January. They were down over 2% for fast food, which we typically don't see unless we're in a recession. They were down 7.7% at casual dining. Investors are kind of looking past it, saying that the weather was really cold, but people still have to eat, right? And so, so there's kind of some worry here for us, because like some of the economic indicators we watch, when you look under the hood, aren't looking great. So credit card debt is at an all-time high, 1.1 trillion. Credit card rates are at an all-time high at 21% APRs. Delinquencies have been rising for auto loans, as well as credit card loans, and they're now above the 15-year average and pre-pandemic levels. So there is some concern, but right now there's just so many variables going on with the weather, with the tough comparisons, and with these economic indicators to figure out exactly how much of this weakness is because of what, right? And so,
Yeah.
but one thing we've seen is customers are dealing with the higher prices and with the higher inflation by putting it on their credit cards, which is not a sustainable situation.
Michael, when we were talking about the Capital One Discover deal, one of the things that was mentioned was how American Express is relatively immune from a potential slowdown. What are some of the names that you cover that if we do see the general consumers tightening spending, we'll be better positioned to continue to deliver sales?
Yeah, so interestingly, it's going to be a different consumer. So in what we've seen, one of the weakest segments has actually been fine dining, and it's a lot of that has been just a pullback in spending. People have been buying less expensive wines, cutting back maybe on appetizers. In a real economic slowdown, fast food and quick service tend to do better because they'll have value menu items. Discounts will be more prevalent, and so although you'll see a lot of low income consumers kind of trade down to the grocery store, the quick service chains will see a lot of middle and higher income consumers trade away from a higher price full service occasion and maybe dine at McDonald's a little bit more often.
Hey, Michael, talk to us about the labor situation in the restaurant business. I know for a long time, like a lot of industries, the restaurant industry had trouble getting labor. Where is it now?
It's well, full service is pretty much where it was prior to the pandemic. So think of Chili's and Applebee's and most of those casual dining chains that we cover, Cheesecake Factory. They're fully staffed right now. So they've recovered pretty nicely. Quick service has been slower. Turnover remains a lot higher, which is crazy to say because it was probably 140% for hourly turnover heading into the pandemic. Now it's probably about 170%. So they're having a lot more of a difficult time holding on to employees. That being said, it's been improving. It improved throughout the year last year. One of the toughest times to staff the store was that late night portion. But chains figured out it's supply and demand, and they have to offer more a higher wage to those employees to attract, good workers, and they've been doing that. And so that last kind of part of the day that was really struggling to hire is starting to come back too. So it's getting better. It's not where it was 2 years ago. 2 years ago was very difficult. There's a lot of people concerned that restaurant workers would never come back, but a lot of them have, and it's much better than it was.
Michael, to take the labor conversation and twist it just a bit, I was just in California for the last 2 weeks where minimum wage is going to be $20 in April 1st. Oh, went to In-N-Out twice, don't you worry. But so $20 minimum wage, I'm seeing a lot of these self-service kiosks getting rid of the kind of front of house, if you will, at some of these fast food chains. How does a higher minimum wage impact what these companies are going to do and impact their margins in turn?
Yeah, I mean, you hit the nail on the head. It's going to be more technology, and it's no coincidence that the companies that we cover that have the highest exposure to California, so that's Jack in the Box, that's Chipotle, they're leading the charge when it comes to automation technology. Right now, Jack in the Box is testing AI automated fryers. Chipotle has an automated make line that they're hoping to roll out in the coming years, as well as automated AI tortilla chip fryers. Right, so it's going to be more automation in the restaurant. But it takes time for that to be implemented because right now the cost for that automation technology is very high, right? But as the wage rates continue to rise and as the price of the technology falls, which it always does over time, eventually there's going to be an ROI, and a lot of those fast food workers are going to be replaced by technology.
Bailey, I can't let Mike go without asking him about one of my favorite restaurants on the planet, Cracker Barrel.
Oh, I love Cracker Barrel too.
The Country Boy Breakfast. I'm taking Lisa there soon. We're going to load up. It's off 5% year to date. It's off 30% over the past 12 months, and it's really underperformed the peer group over the last 5 years. Michael, what's going on here? Don't the truckers need to eat?
The truckers do need to eat. We've written it in the past, Paul. We had a focus idea a couple years ago. Part of the problem was that they had an older customer base, and we thought they'd be slower to come back to the restaurants post COVID. I think their inability to kind of bring younger consumers into the brand has hurt them. That being said, they have a new CEO from Young Brands, and she's looking to kind of shake things up over there. And so maybe they can kind of figure that out. But I think that's been probably one of their biggest problems. They've been slow to adopt consumer-facing technology, right? It's just just not resonating with Gen Z, Gen Y, and Gen Z.
It's disappointing.
But I mean, I was down in one recently in Bowling Green, Kentucky on a Sunday. The line out the door on a Sunday.
Well, Friday night to Sunday midday is when they rock it. Same for most of the family dining chains. IHOP, Denny's, they tend to do that.
So I'm going to take Lisa Mateo there. I'm going to get the Country Boy breakfast. Now I'm going to get it with country ham. I don't know what she's going to do.
Chicken fried steak, Lisa. That's where it's at.
With all the creamy sauce.
Fantastic.
All right, Michael Halen, thank you so much for joining us. Michael Halen covers all the restaurant companies here. And boy, I love listening to the earnings call for the restaurant companies, because there's another sector that gives you a really good pulse on what consumers are doing, what they're spending, how they're spending. As Michael said, are they not getting the wine, not getting the appetizer, or are they upspending, or when times are good, because it's a great view on the consumer.
Well, especially when you're going to Chipotle, again, if you're spending $17, you're more than happy to, at that point, kind of...
That is a lot.
It's too much.
That is.
I mean, if I'm at home, I'll get Chipotle, because then I'll have it for 2 meals, so you kind of can justify it. But if I'm in the office, I'm eating it all, which is calorically not good and budget-wise not
exactly. But I don't know. We'll get Lisa there. I mean, my thing for the Cracker Barrel is like 80 or 90% of the stores are within like a mile of an interstate. That's such a great strategy. I mean, guys thinking about that. S&P 500 off 0.6%. The Dow off about 0.1%, and the Nasdaq off 1.2%. Yields coming in slightly. 10-year Treasury 4.25% on your U.S. Treasury. Right now, with our news in New York City, here's Michael Barr.
Thanks for making me drool during this newscast. President Biden is heading to the West Coast today to add more to his record-breaking re-election war chest. Bloomberg's Jody Snyder has the details from Washington.
And this is a place that President Biden is well ahead of former President Trump in terms of fundraising. President Biden raised $42 million for his reelection campaign in the Democratic Party in January alone. And as you know, he's now going to the West Coast for events with some very deep-pocketed donors. So the president has had the best month to date among small dollar donors as well, which can be a barometer of grassroots support. They added more than 1 million emailed to the fundraising list.
Bloomberg's Jody Snyder reporting. The Biden campaign says it ended January with $130 million on hand. President Biden says the Republican-led House is hurting national security by taking another 2-week break. The White House saying House Republicans have failed to take action to help Ukraine or the southern border. Biden said they're making a big mistake by not responding.
The way they're walking away from the threat of Russia, the way they're walking away from NATO, the way they're walking away from meeting our obligations is just shocking. I've been here a while. I've never seen anything like it.
Russian forces are launching new assaults on multiple fronts, recovering some ground lost to Ukraine last summer. Russian President Vladimir Putin gifted North Korea's Kim Jong-un with a new automobile. It comes as the U.S. and South Korea say Kim is sending munitions to Russia. Protesters gathered outside London's High Court as judges hear an appeal by Julian Assange. The WikiLeaks founder is fighting against extradition to the U.S. on spying charges. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen to kick off the new trading week after the holiday. Right now, the NASDAQ down more than 1%, the S&P 500 down 0.6%, and the Dow right now down about 0.1%. Yields are lower, the 2-year yield at 4.58%, the 10-year at 4.25%, and the 30-year at 4.43%. Currencies, the dollar is weaker, the Japanese yen, euro, British pound stronger, Bitcoin at 51,637. And on the commodities front, we've got COMEX gold higher at 2,039 an ounce, spot gold at 2,027 an ounce, and NYMEX crude, $78 a barrel, Brent crude at $82 a barrel. That is your Bloomberg Business Flash. Paul and Bailey.
All right, Bailey Lipschultz, Paul Sweeney here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can head over to youtube.com, search Bloomberg Radio here. You know, we had that surge in the markets in November, December last year, where we had stocks just rallying dramatically, continuing here into this year to a certain extent. And even in the fixed income space, you made your year in November and December last year. The question is, did that pull some performance from 2024? Let's check in with somebody who kind of does this stuff for a living. Terry Spath, founder and CIO of Zuma Wealth, based in Malibu, California, joining us via Zoom. So, Terry, how did you start this year? What was your view of 2024 going into the year, given that really strong finish we had to 2023?
Yes, thank you for having me on, Paul. I'm trying to switch gears. I am so into this Cracker Barrel discussion that you had.
Yeah.
I've never been to one, and I'm
Well, you've got In-N-Out Burger in
intrigued.
Malibu, so you're in good shape with In-N-Out Burger.
Yeah, there you go. But I'm going to have to try it. But I mean, to get to the real topic, which is, what's going to happen in 2024 for some of the fixed income. You're right that there was a huge bond rally at the end of 2023. And that was great, but that's on the heels of the expectations of rate hikes in 2024. And while we're not clear when that will happen, when rate cuts will happen, how many we will get, we're very confident that the Fed is going to cut rates in 2024. And it's not just because they feel as though they need to, because maybe inflation is contracting or unemployment is getting too high. I think the Fed is really going to have to do some work and pencil out how expensive debt is becoming for the federal government. We've got rates that are much higher than they were 3-4 years ago when the government was issuing 5-year paper. We've got a debt level that's double what it was in 2020. So those are going to be drags on the economy. And we do think that that's going to result in cuts in interest rates at the federal level. And that will be a great tailwind, a continued tailwind for even just the safest bonds that you can buy out there.
Terry, that's interesting because I feel like most times I've talked to people about a need for a cut. It is not spurred by the fact that the national debt has really picked up with the sharp move higher in interest rates. Just looking at the warp function, which I reference far too often. Right now, we're penciling in just south of 4 cuts this year. You look back coming into the year, it was north of 6. Terry, where do we fall with these rate cuts, and what does that path look like?
Well, I mean, I think that's a tough question to answer, exactly when we're going to see rate cuts. Obviously, the markets got a little bit ahead of themselves looking for 6 cuts at sort of an unprecedented level. In fact, that was worrisome in our view, because if you're having 6 cuts, there's something really wrong in the economy. That said, they raised rates late. I think the risk to our view is that they cut rates a little bit too slowly. But I do think that we're going to see that in 2024. And the reason for that is that unemployment is low, meaning full employment has been achieved, which is one of the views of the Fed. We're in, knocking on the door of 2% inflation level that they're looking for, and at north of 5% on the Fed funds rate, and you've got it inverted, meaning short-term rates are higher than long-term rates, and that's been the case now for a while. That doesn't make sense. I think the Fed is going to need to uninvert the curve. And so we'll see that over the course of this year. And just to do like a little bit of math on that, if you've got a 5-year treasury bond that's paying 4% and you get a 1% cut, you're getting another, 3-4% in return. So on a 5-year treasury, you can earn a high single-digit return. That'll probably happen in 2024. And that's not a lot less than what we would expect in the stock market, but with a lot safer, characteristics. So while, just to wrap it up, I mean, when will that happen in 2024? We're not sure, but we're pretty confident it will happen over the course of this year, that we'll see at least 3-4 cuts.
So, Terry, if I do think there's going to be some cuts here, constructive for stocks for sure, do I stick with those Magnificent 7 or maybe they're Magnificent 5 now names, or do I try to find some performance elsewhere, whether it's small to mid caps, whether it's value? How do you think about that?
Yeah, I mean, listen, it's hard to, make a case against the Magnificent 7 with the momentum that it's enjoying. But anytime there's magnificent in front of something, for an investment, it makes me a little bit worried. I think even if you strip out, if you look at the Mag 7, the earnings have been spectacular, and that has really driven the returns for those stocks. But even stripping those out, I think you can see some strength in large cap stocks continue through this year. And the reason for that, again, comes back to interest rates. The trouble for small stocks, and they've been really lagging, and the trouble for that is that their access to capital is weak. Interest rates are high, and they're just, that's just a challenge. Whereas large cap names have a lot more access to capital, they can handle a little bit higher interest rates, and we're going to see some nice earnings in the large cap stocks, high single digit type earnings along with a dividend yield. So this is a nice situation where you've got a year where we can see nice gains in large cap stocks, as well as kind of barbell over to the strongest, the quality treasury market, and you can have a really nice return in that type of a portfolio.
Okay, so Terry, with leaning into some of the bigger stocks, are there industries or sectors that you prefer?
I think that there's sectors that we don't prefer. Right now, the energy sector has been weak, and the reason for that is that inflation's coming down. And when we look at the commodity sector, and that's another reason why we think inflation will stay cool in 2024. If you look at the prices of commodities, they've been weak, they've been negative, and that's the market telling us that inflation's going to be tame in 2024. So those sort of inflationary plays are not attractive right now. The obvious choice on the other end of the spectrum are those companies that do well in a low inflation environment, and those are the ones that we've seen in technology, and the higher dividend plays. Actually, I think those have been underheld by investors, and and I think that's attractive as a kind of pseudo bond play as well.
All right, Terry, thank you so much for joining us. Appreciate it. Terry Spath, founder and CIO of Zuma Wealth. They are based in Malibu, California. All right, Bill, I'm going to give one last pitch to Lisa on the Cracker Barrel. Here we go. The Country Boy Breakfast starts with 3 farm fresh eggs and a choice of 2 sides like applesauce or something, blah, 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 whatever.
Okay.
Now, your meat, your choice is sirloin steak tips, sugar-cured or country ham. I go country ham.
Okay.
Now, it comes with buttermilk biscuits and sawmill gravy, all for $14.97.
I mean, it's a deal.
So you got the mass value there, I think.
Where's the turkey bacon?
Well, you can do turkey bacon.
No.
And I get a big pitcher of iced tea put in front of me, and I'm good. That's all you need. You don't need to come back.
Okay.
So there's a value play there.
It is a value. It's a good deal.
All right. No?
No, I can't do it.
So if you go to a Cracker Barrel, what is it?
If I do, I ask for specifics. I just say, hey, can I just get scrambled eggs, side of wheat toast, and maybe some and I'll throw like a vegetable on the side.
Oh, that's like an IHOP.
But they look at me like, who are you?
Yeah. Exactly.
It doesn't meet the bar.
But it's just, you can't beat it. But the stock has been a dog. I mean, it's interesting to see if they can turn that thing around there. But we saw it with, they've got a lot of issues when you're dealing with a restaurant. Food inflation, labor, all kinds of issues.
Well, the interesting thing, too, is that, as we talked about earlier, it doesn't really cater to the younger generation that's trying to be kind of conscious of being fit and eating healthy, whereas, again, big fan of Cracker Barrel, but I don't go there to feel good about myself and have a nice Sunday morning after a workout.
That is not where you go. It's a kind of a once in a blue moon kind of thing for me, and I found one in Jersey, so every once in a while we'll track.
It's like a
out there.
road trip place.
It
That's
is.
what I think.
It's very, yeah, it's kind of a road trip. If I had a Harley Davidson, I'd ride my Harley Davidson out there, but I don't have one, so I just take the Beamer. But it gets me there. All right, we're going to have more coming up. This is Bloomberg.
PSV. Borussia Dortmund. Live chat. Balance pound. Live chat. Balance pound 100.39. Live chat. Balance pound 1. Live chat. Quick links. Live chat. Balance. Borussia Dortmund. 2000.
company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Shares of Discover Financial Services, well, they're up about 14% right now, and this is after news that Capital One will buy Discover in a $35 billion deal. Ed Mills, Washington policy analyst with Raymond James, tells Bloomberg Surveillance that something else is also driving the conversation.
There's been a push to say for credit card issuers, if you are above $100 billion in assets, you have to use a network that's not Visa or MasterCard. Discover was looked as the winner there. Now that bill has low odds, but it could be part of a pro-competition angle that they would say, we're not really a bank, we're a credit card company with this network, and that's why you should get us approved. So that's going to be the push and pull this year, is how much we look at it as a network versus how much we look at it as a bank.
Capital One is up about 0.8%. Truist Financial, it's agreed to sell a majority stake in its insurance business to a group led by Stone Point Capital. That all-cash deal values the company at $15.5 billion. Truist is down about 0.5%. And shares of Bayer, well, they're up about 3% in Germany, and this is after it announced plans to slash its dividend by 95%. To retail now, where Walmart has reported stronger than expected earnings, even as shoppers got a bit more selective. Joe Feldman is Senior Managing Director at Telsey Advisory Group.
Walmart has been doing very, very well. They certainly seem like they won the holiday season, and the consumer has been trading down. I mean, we do continue to see that, and I think Walmart's strength reflects some of that. It doesn't mean it's all bad for the consumer out there. I do think that the consumer is choiceful, as Walmart said, and it has been able to spend where needed.
Now it's up about 2% right now. Walmart also announced it's agreed to buy TV maker Vizio for about $2.3 billion. Home Depot, well, their shares are a little bit lower, and they reported fifth consecutive quarter decline in revenue.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, quick data check for you. S&P 500's off about 0.6%. NASDAQ off about 1.3% there. The Russell off 1.3% as well. The VIX elevated here above 15 right here. Called that out for Tom Keene. Yields are coming in just slightly. 10-year Treasury 4.25%. WTI crude oil off a little bit here, just under $79 per barrel. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Bailey, Lisa. President Joe Biden is California bound as he looks for more cash for his reelection bid. Biden heads first to a fundraiser in Los Angeles today. Biden's campaign and the Democratic National Committee say they collected $42 million in contributions during January. Biden ended January with $130 million in cash on hand. Julian Assange's lawyers have begun their final UK legal challenge to stop the WikiLeaks founder from being sent to the US to face spying charges. They argued their case in London's High Court this morning. His wife, Stella, addressed supporters outside.
He's being accused of journalism. This case is an admission by the United States that they now criminalize investigative journalism. It's an attack on all journalists all over the world.
Julian Assange was a no-show in court today after his lawyer said he was unwell. A college student in Colorado Springs is due in court this afternoon, accused of murdering 2 victims in a dorm last week. The bodies were found after a shots fired call. 25-year-old University of Colorado student Nicholas Jordan from Detroit is accused of killing 24-year-old Sam Knopp and 26-year-old Celia Montgomery. Health experts are warning about a surge in measles cases nationwide. This after the number of confirmed cases at an elementary school in Fort Lauderdale, Florida, jumped to 5. 9 other cases have been reported in the Philadelphia area since December, all involving unvaccinated people. Experts say when 95% of the community is vaccinated, measles cannot spread, but currently 36 states fall below that 95% threshold. Dr. David Kimberlin is co-director of the Division of Pediatric Infectious Diseases at UAB.
We have to have very high, 95% or greater immunity within a population in order for this virus that's like a heat-seeking missile to not be able to find someone who's susceptible.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Bailey, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Hey, Bailey, how about this story here? Perhaps no other hedge fund manager has perfected the art of having their money work for them while they sleep or tweet, like Bill Ackman. The Pershing Square Capital Management founder made $610 million last year after barely touching his portfolio of just 10 stocks. The total landed Ackman at number 7 on Bloomberg's annual list of the best paid hedge fund founders, his highest ever position. He failed to crack the top 15 in 2022, so not bad.
And I love the graph that says the Hall validates a shift from 2 years ago from a swashbuckling shareholder activist to taking a quieter approach. So
yeah, just in case you're wondering like who the top players are, Izzy Englinger from Millennium, he made $2.8 billion last year. Ken Griffin, Citadel, made $2.6 billion. And then for New York Met fans out there, Steve Cohen, 0.72, made $1.6 billion. So he can't say that he can't afford to spring for some big players at least.
I was going to say, now the question is, when does Ackman buy a professional sports team?
Right, because we had David Rubenstein buy the Baltimore Orioles recently. Yeah. So we'll have to see. And the Washington Nationals pulled themselves off the market, and that was interesting to me because I guess they couldn't find a buyer they liked.
Interesting. I didn't see that news. I just know that the whole argument around the team had been, at what point do they, try to actually acquire talented players as opposed to just shipping them off for spare parts.
Exactly. So, I mean, again, that presumably the Nationals were on the market for a couple of years. Who knows how serious they were? But anyway, the hedge fund managers getting into the game. It'll be interesting to see to what extent they ever get into really the NFL, the big picture there. All right, we got Balance of Power coming up with Joe Matthew. I usually say from D.C., but he's here in New York. So they're going to be doing it from the power chair here in the Bloomberg Interactive Broker Studio. That's coming up in just moments. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
South Carolina says no to Nikki. Welcome to the fastest show in politics. With two new polls out from the Palmetto State today showing a big win ahead for Donald Trump this weekend. We'll go through the numbers for you, walk through it with Bloomberg's Gregory Cordy in Washington. Goldman Sachs looks into its crystal ball to see exactly where the economy will be on Election Day in November and who it will help. We'll dig into the details with economist Danny Blanchflower this hour, and we'll have analysis from our panel. Bloomberg Politics contributor Jeannie Shanzano is with us, along with Lisa Camuso-Miller, the former communications director at the RNC. And we start, as always, with a look at Wall Street. With me here at World Headquarters in New York is Mr. Charlie Pelley.
Hi, thank you very much, Joe Matthew, and great having you here in New York. We have got the Dow, the S&P, NASDAQ, all in the red right now as we kick off the show. Big tech dragging the stock market away from its all-time highs. Wall Street awaiting NVIDIA's earnings tomorrow for confirmation that it can meet the sky-high expectations set by the AI boom. Right now, we've got NVIDIA tumbling today by 6%, 682.30 on NVIDIA shares ahead of earnings. So here's where we stand. S&P down 41, a drop there of 0.8%, back below 5,000, 49.64. The Dow at 38,501, down 126, drop there of 0.3%. The NASDAQ Composite Index now down by 1.4%. 10-year yield 4.24% with a 2-year at 4.57%. Spot gold today is pushing higher by 0.5% at 2,027, while West Texas Intermediate crude down 0.4%, 78.86 a barrel. Speaking of crude, ExxonMobil has pledged not to curtail exploration or production plans in Guyana as Venezuelan President Nicolas Maduro continues to ramp up his territorial claims in the region. ExxonMobil's upstream president Liam Mallon spoke this morning with Bloomberg Surveillance, and he discussed the oil giant's rapid expansion in Guyana.
We've been extraordinarily successful in a very short time. You think about, today we're producing over 600,000 barrels a day. That's gone from 0 to 600,000 barrels in 4 years. And the average development time from when we discover a well to actually bringing it online and putting that oil in the market is less than 5 years. That's about half the industry average.
And today we've got ExxonMobil shares little change, lower by 0.1%. Again, recapping a lot of red on the screen. Back to our Tuesday for a holiday-shortened trading week. S&P down 41, drop there of 0.8%. Balance of Power continues. Once again, here he is in New York, Joe Matthew.
Thank you, Mr. Charlie Pelley. Good to see you in the flesh. And Charlie reminds us it's not Monday. It just feels like one. Welcome to Tuesday and new numbers with 4 days to go now to the South Carolina primary. It seems so far away. So much seemed possible when we were in Iowa and New Hampshire. Not so much now. As I read on the terminal, Nikki Haley vowing to stay in the Republican presidential race against Donald Trump, regardless of the outcome of Saturday's contest. And that's a good thing, because she's looking at the same numbers we are. Not good today. Suffolk University, USA Today, shows those among those at least very likely to vote in the Republican primary in South Carolina. Donald Trump leads Nikki Haley by close to 2 to 1, 63% to 35%. Emerson is also out with a poll today showing not quite as wide a gap, but a slam dunk for Donald Trump, and that's where we start our conversation with Gregory Cordy. He's with us from Bloomberg's Washington Bureau, of course, Bloomberg politics reporter. Gregory, we've seen remarkable consistency in these numbers, whether it was Winthrop or Suffolk or Emerson coming out of South Carolina. Nikki Haley is going to lose badly this weekend, is what they're telling us, right?
Yeah, if you want to look at the bright side for her, she is gaining ground on Trump. Back when just after the New Hampshire primary, she was trailing by 30 points on average. Now, if you average out those polls that you talked about just now, she's trailing by 25 points. But the problem is, the primary's in 4 days, and at this rate, she will overtake Trump sometime far in the future when it won't matter anymore. And so, yeah, these are discouraging poll numbers for her, but she's pledging to soldier on at least through Super Tuesday, when frankly, the polls and the party rules are even more foreboding for her, because then you get into winner-take-all states where all Trump needs to do is win a bare majority and gets all the delegates, and those can stack up pretty quickly. Yeah. And at this rate, he could clinch the nomination by early to middle of next month.
Well, that's certainly what the Trump camp thinks, Gregory, as Nikki Haley delivers what is being referred to as a state of the race speech today in Greenville. She's at it right now. Donald Trump's senior advisor on the campaign, Chris LaCivita, says this is done in the next 4 weeks, not who's ahead, who's trailing, like done, presumptive, we have the delegates. This is the math here. Even if Haley reprises her New Hampshire performance, in every state voting over the next 4 weeks, the campaign has crunched numbers to show that Donald Trump would still cross 1,215 delegates required on March 19th, Gregory. That's the day Florida, Illinois, Ohio have winner-take-all primaries. Could Nikki Haley, if this really is a campaign in waiting for something to go wrong, continue through all of this? Just hang in there?
Yeah, she really is waiting for some big game-changing moment, but it's hard to see where that will come from. Of course, former President Trump is facing 4 different criminal indictments, but the trials for those won't start until late next month at the earliest. And even those don't seem to have much of a sway on Republican voters, who tend to rally around him every time he faces these legal challenges. There's just such a big chasm here with where the Republican base is now behind Trump, and where, those sort of moderate, those more moderate to liberal Republicans, we might call them traditional Republicans, Main Street Republicans, country club Republicans, whatever you want to call them, they still exist in the Republican Party. They still would love to find a Republican candidate that they like, certainly more than Donald Trump and certainly more than Joe Biden. But there's just not enough of them to carve out space for Nikki Haley at this point, it seems like.
We do have an ear, Gregory, on her speech right now. She did play around a little bit when she came out there, but not dropping out, as some suggested. She did acknowledge that right off the top. If you have to tell people you're not dropping out in a campaign speech, where does that say? What does that say about your campaign, Gregory?
No, the problem is when you're behind at this stage of the race, you have to tell people every day you're not dropping out, because the one day that you tell people, you don't tell people that, people assume you're going to drop out, and then that's where the donor money dries up, and that's where things really start to go south. So, yeah, she has to come out and say that she's in this for at least the medium term, and that includes South Carolina, obviously, on Saturday, but then also Super Tuesday early next month. And in between, we have Michigan, where her campaign just put in $71,000 in the Detroit market and television advertising. That's not a whole lot, but it is laying a marker to say, look, clearly I'm looking beyond South Carolina. And so she has to do those kinds of things to at least project that this is not a campaign that's going to drop out. Because remember, the yardstick that she set for herself after New Hampshire, she said, I came in third in Iowa, I came in second in New Hampshire, and all I need to do is improve on my performance from state to state. She's now moving those goalposts to say that she's in it no matter what after South Carolina. That's not what she said right after to New Hampshire. She needed to improve on New Hampshire to stay in it. She's not necessarily saying that in her speech in Greenville as we're watching today.
Yeah, that's for sure. You wonder what a Tim Scott endorsement might have meant at this stage if she was able to wrap that up. Of course, Donald Trump got it in New Hampshire. Gregory, it's good to see you, and we thank you. He'll be, of course, a part of our coverage here of the South Carolina primary. It's only 4 days away. It's not looking good for Nikki Haley, but as we keep hearing, that just may not matter when it comes to her plans in staying in the race. Enter Goldman Sachs. It's the economy, stupid. You want to advance to the general election and get a sense of what voters will be basing their decisions on? Check this report. February 5th, reading about this today, a fascinating read on Bloomberg. Wouldn't know about it if it weren't on the terminal and at Bloomberg.com. This is new research that explores where the economy will be when we vote and who that might break for. And it finds that President Biden's economy will be right around the dividing line that separates winning re-election campaigns from losing ones. And they've identified about a dozen areas here in which they can plant their flag and essentially make a prediction. This is fascinating stuff. And we knew there was one man to talk to about it. Danny Blanchflower is with us, the economist, of course, at Dartmouth College, recipient of the Commander of the Order of the British Empire in 2009. He put the fishing pole down to talk to us for a couple of moments today on Balance of Power. Mr. Blanchflower, it's great to see you.
Hi there.
Could anyone in their right mind, could anyone in their right mind predict where the economy is going to be in November?
Well, honestly, it's really, really difficult. It certainly looks like a soft landing. It certainly looks like the economy is in pretty good shape now, much better shape than I expected with all the rate hikes. But in 9 months' time, who knows? But I don't think there's a prospect of very rapid deterioration between now and November, unless something catastrophic happens, which I don't foresee. But we're going to see unemployment rates below 4% or something like that. So if you look at all the forecasting models, a whole set of models done by Ray Fair and others, the state of the economy is an important indicator of what's coming. People's living standards are important, and people's perceptions are important. But in a sense, the contradiction is people's perceptions of how the economy is doing are not that great. But they keep on spending, and the economy is being very resilient. And so there's the puzzle.
Well, you just outlined that perfectly, because it's confounding the administration and the Biden campaign. Right. We look at the strength behind this jobs market. It's enough to confound the stock market, certainly, as well. Right. When you look at consumer spending, you mentioned it, and that's one of the areas that Goldman looked at here and what could change the picture before November, as they point out savings from stimulus and lockdown running out. Where's the consumer 6 or 9 months down the road?
Well, I mean, in some sense, the last 2 years has been about expecting the consumer to back off, especially in the light of what they say in terms of consumer confidence measures. Consumer confidence measures over the last 12 months or so have been absolutely predicting recession. They tell you stories about the recession that we saw in 2008. They've been consistent with that, but the consumer has still kept going. So unless there's something really that changes everything, my assumption has to be now, that I was wrong, that the data, all the things predicting something coming were wrong, but there are one or two little negatives on the horizon. Let me give you one. A couple of good predictions about whether we're in recession, a couple of good indicators, is whether we have 2 successive months of negative growth in employment. Now, either on what's called the establishment account, which is non-farm payrolls, or on the household account, which is where you generate the unemployment rate. And we've seen very big declines over the last 2 months. 680,000 the month before and 31,000. That's a pretty darn good indicator to say you've gone into recession, but none of the other things are sitting with it. So obviously, there are 1 or 2 red flashing lights, but I think Goldman's right that it's hard to see the economy being really bad, although the perception, I think, is people see very well that potential Republican voters see the economy as being much worse than the Democrat voters do. And obviously the question is, what do the swing voters in the middle see, and how does it change by state? But I think this is a tough one to call, but we're now coming up to March. We're not that far away. Economies, unless some terrible shock hits them like it did in 2008 and in 2020, and again, I guess in 22 with the war and the inflation shock. But it's hard to see much changing where we are. So I think pretty much keep on keeping on is likely where we are.
Interesting. You look at another item, that's inflation, of course, a huge one for Joe Biden. In fact, it was referred to in the report as Biden's weakest link. Danny Blanchflower, what could change in Goldman Sachs's view is the war in the Middle East that has already sent freight costs surging. That's another wild card.
Well, of course. I mean, the ability to get goods through the Gulf, through Suez, through the canals, and try and continue to basically deliver products. That's important. I mean, we know what happened when supply chains closed up during COVID. So that's an obvious potential. I mean, obviously, what happens in Ukraine? Does that war, does it increase? Does it slow? What does it do? So those are clearly potential shocks. But the inflation rate has come down and come down sharply, of the order of 3%. I think the best predictions, probably without knowing exactly what's going to happen in the Middle East, is that those numbers will continue to drop. And that's what most people are forecasting. And even if there's tough things going on, even if the unemployment rate rises, the predictions are something like 4%. And we haven't talked about output. It doesn't appear that a recession, it does appear that your output may be slowing. But the likelihood is you're still going to see positive output published for the second and third quarters, which is what we'll see go into the recession. So in lots of senses, I mean, the truth is that whether people perceive it or not, the Fed has actually generated a soft landing. The data are pretty darn good. And the president is entitled to say, I've generated masses of jobs. The unemployment rate didn't rise. Wage growth has held up. And the economy's continued to grow against all the pundits and all the predictions. So in some sense, that's their fingers are crossed and hoping that some terrible shock doesn't come and people come around to understanding how good the economy is.
Boy, okay, we'll see about that. And time could be the difference maker, Danny Blanchflower. In our remaining moment here, I wonder where you are, though, on the rate hike camp right now. We had Larry Summers say on Bloomberg last week that a hike is possible. Everyone's obviously betting on cuts. This thing does not move in a straight line. Could you see inflation reversing between now and November?
No, I don't. I mean, the thing, in some sense, I think these such comments by Larry Summers and others are quite interesting. Well, I was an interest rate setter. The job of an interest rate setter is to think about what the inflation rate is going to be 15 months to 2 years ahead, because monetary policy takes quite a time to have an effect. So even if inflation now perhaps bumps around, that doesn't suggest that you should raise rates. Everything suggests that inflation in the period ahead is going to decline. I think it shows Larry Summers doesn't seem to understand how you do monetary policy. He's never been a monetary policy maker. And the answer is the best thing to think about is rate cuts are on the agenda. The question is how soon? Will it be March? Will it be May? And they will continue to come. But you're not, monetary policymakers really shouldn't be responding to 1 month at a time data. They should be thinking, what's my view about 18 months ahead? And is the latest data going to change my view about that? So I don't really, unless something fundamental changes, anybody who thinks there's a rate hike coming is in gaga land.
Last time he was on the program, he made clear to me and our listeners and viewers that he would fail me. I would fail his economics class, and I'm pretty sure today didn't change that. Danny Blanchflower, it's great to see you. Thank you for the insights. As always, Professor of Economics, Dartmouth College. He can get back to the fishing now. I'm Joe Matthew at Bloomberg World Headquarters in New York. I'm glad you're with us. Only on Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. 12:21 the time right now on Wall Street. The Dow, the S&P, NASDAQ 100 Index, Russell 2000, all trading lower right now. 45-point drop in the S&P, down 0.9%. Dow Industrials down 129, lower by 0.3. The S&P, by the way, now at 49.60. NASDAQ down 1.6%. The Russell 2000 down 1.5%. Big tech dragging the stock market away from records as Wall Street awaits NVIDIA's earnings tomorrow after the bell for confirmation it can meet the sky-high expectations set by the AI boom. 10-year yield now 4.25%. The 2-year 4.58%. Spot gold today trading higher by 0.5%, 2,026 the ounce. And West Texas Intermediate crude lower a little change, down 5 cents now, 79.15 a barrel on WTI. Shares of Discover Corp are surging. We have got Discover up now by 14.6%. Capital One Financial is buying Discover Financial Services in a $35 billion all-stock deal to create the largest American credit card company by loan volume, giving the combined entity a stronger foothold to compete with Wall Street's financial giants. Shares of Capital One, they're up 0.7%, but again, we've got Discover higher by 14.7%. Again, recapping stocks lower, S&P down 45, down 0.9%. I'm Charlie Pellet. Balance of Power continues. Once again, here's your host, Joe Matthew.
All right, Charlie, thank you. It's another day where no one's talking about it, but we will. The shutdown, anybody care that the government shuts down in less than 2 weeks? That's a week from Friday if you're playing along on your home game. March 1st is when it begins. March 8th is when it is complete. And there's no budget. There's no plan for a budget. They're not writing spending bills unless something emerges from this recess that blows our minds. There won't be a compromise likely to pass them either. And so it becomes a question of either, as Tom Emmer told us last week, the majority whip, we do this in mini buses, as we like to call them in Washington, not to be confused with omnibuses, or we just actually shut down. And that might be the case, because Mike Johnson, of course, is being threatened, as his predecessor was, with being fired if he does that very thing. We were told no more stopgaps, no more CRs. And Nathan Dean is watching this from his perch at Bloomberg Intelligence. The BI Policy Watch, U.S. government shutdown impacts. When Nathan starts to try to figure out what's going to happen if we shut down, that means we're probably closer to shutting down. And he's with us right now. Nathan, good to see you. Where are we as we enter this new week here, this week of recess, knowing that there will only be 3 days when we come back? Is the conventional wisdom that we are, in fact, finally shutting down in March?
No, I don't think so. I mean, we have a low chance of a shutdown for that reason that you just said. We only have 3 days. And also remember, when the Senate comes back, they have to deal with the impeachment of the DHS secretary. Now, I think Senator Schumer is going to say, look, let's focus on the shutdown and not that. But there's one thing that Congress has been able to do this year. It's called kick the can down the road. Mm-hmm. And I honestly think, despite the fact that Speaker Johnson is going to have this vacate motion threat, he's had this before, he's called their bluff, I think he'll call their bluff one more time, and then they'll kick the can maybe to April or after the Easter holiday. The one thing that we should just always remember to tell our clients, and this is what we do, is that, and I've said this before in the program, is that scary headlines associated with shutdowns don't equate to scared markets. Mm-hmm. This is something that the market has seen before. This is something they're going to see again. The one date that we are telling folks that they should be paying attention to is April 30th, because if we're still operating under a continuing resolution at that time, we have an automatic 1% sequester cut to everything, including the Department of Defense.
That's right. You are pointing out in your piece today, the large contractors will be protected during short-term shutdowns. So not advancing all the way to the sequester, but if there were an interruption here of days or weeks, the Lockheeds, the Boeings, the Raytheons would not be damaged by it.
That's correct. I mean, obviously there's headline risk that could be associated with, but these large contractors have projects that are funded multiple years. Mm-hmm. Who's impacted?
smaller contractors that have smaller term contracts or contractors that are automatically furloughed in a shutdown, they usually don't get the back pay, unlike government workers. And then also, if you're in the process of working with the government on trying to secure a new funding contract, if the government shut down, and remember, in this case, it'd be 4 out of the 8 go on March 1st, the rest go on March 8th. So if you're working with the Department of Agriculture and they shut down on March 1st, they're not going to answer their phone and you're just going to be delayed.
Got it.
The one thing that contractors are paying attention to, on the other hand, is the Ukraine, Israel, and Taiwan funding, where depending on that funding level, you could see 1 to 3 to 4% revenue growth over the next few years. Now, I think that Senator Schumer, when he comes back, will say, you know what, we're going to offer the House a funding deal just to kick the can down the road, but there is a chance that he may say, we're going to offer a funding deal and we're going to include Ukraine and Israel and Taiwan aid. If he does that, the odds of a shutdown go greater because Speaker Johnson now gets put into a political corner where President Trump is going to get involved. And so, a lot of things can happen there. We are optimistic that Ukraine aid is going to happen by April 30th, but the pieces are going to be kind of hard to predict exactly when that's going to happen.
Why are you optimistic when we hear the not another dollar cry from the Freedom Caucus crowd and so much discord over the way this has gone so far? The border, on again, off again. We saw the Senate pass something, but it doesn't have a path in the House, does it?
No, it doesn't have a pass in the path in the House. Now, the reason why I'm optimistic on the Ukraine aid is because this is one of those issues where I think if you were to give most of the people in Washington truth serum, they'd say, look, we're in favor of this. Now, there's political angles that have to come into play here. But ultimately, when Senator Schumer usually sends these deals to the House, he does it in a way that entraps the Speaker and forces the Speaker to make a decision. Because I think the American populace would be on the side of saying, look, a deal that has funding issues plus the Ukraine-Israel aid is somewhat popular. So I think if there's a political argument here, and just remember, we are in an election year, I think this is something that Speaker Johnson is going to have to play ball on and eventually just figure it out. Maybe they'll give him some political wiggle to, get out of this. But ultimately, if they don't get the Ukraine aid, this plays into President Biden's hands even further, like we saw with the border security deal. He'll come out, make more speeches, and again, turn this into an election issue.
This is great analysis as we spend time with our friend Nathan Dean from Bloomberg Intelligence. Something very important that you said, Nathan, and if you're just joining us, I want to point people's attention to April 30th. We're talking about a potential shutdown here in March. Nathan doesn't see it happening. BI has its own reasoning and logic for that. If we head to that sequester, though, Nathan, if that across-the-board cut does happen at the end of April, what happens to these same contractors we're talking about here? Because that would indicate to me that cuts are coming, and that supplemental may not have passed at that point as well.
Yeah, if we get that April 30th sequester, these contractors are going to have a tremendous issue that they're going to have to work with. The reason why we don't think that's going to happen, though, is because the Department of Defense is involved. This isn't just any type of agencies where the Republicans or Democrats can pick on that agency and say we don't like what's happening there. It's the military, and it's obviously the military in a time where geopolitics is extremely important. So I think what will happen is that the contractors could have some headline risk going up into that date. And look, nothing happens in Washington until people are pushed back into political walls, and they may not happen until April 28th or April 29th. Yeah. But eventually, we do think something will actually come to fruition, and they'll get a deal done.
The Hawks are going to freak out if we get to that point. That's not going to come easily, Nathan. When you consider an across-the-board cut to defense funding at a time like this, we may be obsessing a little bit more over these defense contractors than some other folks who would be impacted by a shutdown. But the sequester goes right to the heart of the Armed Services Committee and the need to enhance, not cut, Pentagon funding, right?
Yeah, absolutely. And not only does it just Department of Defense, but you're talking Treasury, Commerce, Ag. So they're not even the large defense contractors, but even just anybody who's working with the government and relies on government spending as part of their revenue base is going to be impacted. We saw what a sequester threat did several years ago. And look, I don't think there's anybody in Washington who wants this done. So the question is, can cooler heads come together and avoid a sequester? Now, who makes the rules? Congress. Who can come together and kick the can down the road? Congress. So if we get to April call it the ultimate kick the can down the road bill. Maybe they say, okay, we're going to have a continuing resolution, but it just goes beyond the fiscal year date. Anyway, I'm just making things up here. But, I think ultimately Congress will be able to figure this out. Nobody wants to have this fight in an election year, not even folks that want to turn this political. And I think Speaker Johnson, Senator Schumer, Senator McConnell, and the White House can all come together, and they may be holding their thumbs and their noses when they do this, and they may say that this is something that they're against, and ultimately you may need more Democratic votes than Republican votes to get it through the House. But I do think that something will come together. They'll find a solution, and both sides will be able to say that they win politically.
We cannot spend time with Nathan Dean at Bloomberg Intelligence without asking him about cannabis. This is always on your radar, and this is an interesting one as we wait for rescheduling potentially. Nathan, I'm just bringing this up because the FDA put out its fiscal year drug safety priorities report on Thursday, highlighting the rationale that it's using and the research that it conducted here to lead it to recommending rescheduling. What's going on with this? Is the DEA listening?
So we actually have heard rumors that the DEA is almost imminently going to release its reschedulization decision. Now, I should state, these rumors have happened before. So we don't actually pay attention to the rumors. But what we do know is that we do think that there is a high chance, a 70% chance, that the DEA is going to say, let's move this from Schedule 1 to Schedule 3. Now, what's going to happen to these marijuana equities when that happens? Well, the primary relief here was what's called 280E tax relief. And it moves your tax base or your tax rate effectively from around 40% to around 5 to 15%. So a lot more cash is going to come back into these marijuana equities. Now, in terms of processing catalyst, you're going to have that decision, but then also on that same day or probably the next few days after, they're going to put out a proposal. So it's not going to be set in stone. This proposal will have a comment period, finalization, but ultimately you will know that that tax relief is coming. Things like decriminalization legislation, that's just not going to happen anytime soon.
There's nowhere else you're going to hear this kind of specific analysis on these stories. Thank you, as always, Nathan. I wish I was there with you. Nathan Dean in Washington, policy analyst, senior policy analyst at Bloomberg Intelligence, with us on the regular here on Balance of Power. I'm Joe Matthew at World Headquarters in New York. We'll assemble our panel next after we check world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Elon Musk's X social media platform says it mistakenly flagged and suspended the account of Alexei Navalny's widow, Yulia, a day after it was used to challenge Russian President Vladimir Putin over her husband's death. This video shows the opposition leader's mother, Ludmila, calling on Putin to release her son's body from the Arctic prison where he died. In a post on X, the platform says its defense mechanism against manipulation and spam flagged Yulia Navalny's account as violating its rules. The company adds it is now updating the process. A Los Angeles woman is being detained in Russia after being accused of treason. Russian authorities allege the 33-year-old dual national raised funds in support of Ukraine. A statement also said the unidentified woman repeatedly took part in public actions in support of the Kyiv regime in the U.S. The punishment for treason in Russia is up to 20 years in prison. Well, the rain keeps coming in Southern California. Much of the state is under a flood watch. Officials in Santa Barbara County have issued evacuation warnings for waterfront neighborhoods. This official is warning people to be careful.
We ask you all in Santa Barbara, please stay away from creeks. They're absolutely dangerous.
Many parts of California are already saturated. Global news 24 hours a day and whenever you want it with Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all trading in the red. Back to work Tuesday. Right now, the S&P is down 49, below 5,000, 49.55. Drop now of 1%. Big tech dragging the market lower. The NASDAQ Composite Index down 266 points, drop there of 1.7%. NASDAQ 100 Index also lower by 1.6%. All of this ahead of NVIDIA earnings tomorrow. NVIDIA shares down today by 6.4%. The Dow again down 157, drop there of 0.4%. 10-year yield 4.25%. The 2-year 4.58%. Meanwhile, the U.S. economy outlook remains clouded. And with that story, here's Bloomberg's Vinny Del Giudice.
The index of leading economic indicators dropped again in January. The index is intended to project the U.S. economy's path. It's been negative for almost 2 years, though the economy has skirted a full-blown recession. The labor market and the interest rate spread accounted for much of the weakness. Factory orders, building permits, and consumer sentiment were also in the red. Vinny Del Giudice, Bloomberg Radio.
And again, 10-year now at 4.25%. Spot gold up 0.5%. 2022 the ounce, while West Texas Intermediate crude just about flat on the day. WTI 79 handle now 79.17. A drop there of less than 0.1%. Walmart after earnings up 3.3%. Home Depot after earnings down by 0.5%. Recapping, S&P down 45, down 0.9%. Balance of power continues. Back we go to New York, and once again, here he is, Joe Matthew, and big warm welcome, Joe.
I do appreciate it, Charlie Pellet. I get to sit right across from him. If you're with us on YouTube, go there now, search Bloomberg Global News. I'm lucky enough to actually be in the room with Charlie Pellet today. I don't have to ride the subway or listen to the radio to hear his voice. Hey, it's the voice of the New York subway, if you didn't know that. Thank you, Charlie. And I'll tell you what, the new polls out today pretty much tell us what we already knew or thought we knew about South Carolina. It is not a question of whether Donald Trump is going to win. It is a question of by how much. USA Today's Suffolk University poll today. Wow, that's a spread. 28 points, 63-35. The Emerson poll, 22 points, 61-39. This is in sync with the other polls that we've seen, and there haven't been a lot of them. Every day, Nikki Haley must wonder, is this the one that's going to show me turning this around? And it's not, as she delivers a state of the race speech today in kind of a last ditch to be taken seriously before potentially losing her home state badly. We reassemble our panel. With us today, Jeannie Sheehan Zaino, Bloomberg Politics contributor, joined by Lisa Camuso Miller, Republican strategist, former communications director at the Republican National Committee, host of the Friday Reporter podcast. Jeannie, I'll start with you as our polling expert here. When you see such consistency, such continuity between polls, between different shops, that's got to tell you something, right?
It does. And these are both very good, reputable polls. You know, one of two things is going to happen on Saturday. It's the polls are going to be proven right, and she is going to lose in double digits, or we are going to have a real shockwave across the polling industry. You know, the one sign I keep hearing that maybe the internal polls are showing something a little different than the public polls is the fact that Nikki Haley has changed her expectations. You know, she was saying we have to do better than we did in New Hampshire, which was about 11 points. Now she's saying she expects it to be close. Well, if this thing is going to be close, the polls are not showing it. So that would lead us to believe her internals are looking better, or she is just saying something publicly that the internals don't support at all.
When you see these numbers, what does it make you think, Lisa? Whether it's 20 or 30 points for Donald Trump, what's going to happen this weekend?
Well, I mean, so far the polls have really been on target, and so in other states. And so I expect that we probably will see that as the result of Saturday's primary. But also, too, Joe, I'm curious about Nikki Haley's plan here, because I don't think the plan is to win South Carolina as much as it is to show stamina and staying power, because I suspect that this is a little bit of a longer game for her. This is her plan to show that she can turn out the vote for herself, whether or not, certainly not winning, but also can also show some stamina and some consistency across the board in these states as she continues to go into Super Tuesday.
I know a lot of this is talking game here, but the research or the philosophy, the theory we're getting from Mr. Lasavita, is pretty remarkable here. This is Donald Trump's senior campaign advisor, Chris Lasavita, who's got a map, essentially, the next 3 to 4 weeks of how Donald Trump is going to shut this down. Jeannie, he says that even with a New Hampshire-level performance in every state voting the next 4 weeks, they will have this done and cross the 12-15 delegate threshold by the 19th of March, when big states like Florida, Illinois, Ohio hold their primaries. It could be a week earlier, depending on how Super Tuesday goes. Jeannie, does that sound real?
It does sound real, because the way that the Republicans do their math, there are many take all states. So to his point, even if she wins, 30, 40%, even if she does comes close in a winner take all state, it doesn't result in delegates. And so that means Donald Trump, if he wins by even just 1 point, which we think he'll win bigger, he's going to take all those delegates. And so that is the problem for Nikki Haley, which is why so many people have asked, is she still staying in the race? And she, of course, just addressed that. She said so many of tuned in to hear me say I was dropping out, and she is staying in this thing. But the question really now is why, to what end? Because we can't imagine, unless these polls are wildly wrong, that she's got a shot at the delegates she needs. So maybe she's hoping for something that happens to shake this thing up a good deal, but otherwise his math is right on the delegate count.
Well, yeah, if the conventional wisdom is correct, and I think what you're looking at here, Lisa, for the Nikki Haley campaign, it doesn't matter. He could shut it down tomorrow. She's not trying to win the nomination at this point. She's trying to hang in there in case something bad happens to him, right?
I mean, that sure seems like the strategy, Joe, and it seems like it's probably not. Well, it's a hard strategy for her to sustain over time if her funders don't stay with her. But her messaging has been consistent, and sometimes some people are even saying that it's too little, too late. But Nikki Haley is a smart political mind, and she has a lot of really good. She's got a really good track record. So to me, this is less about winning the delegates and more about her long game. And that's what's, I think, curious to people. But also, too, as her funders stay with her and stay supporting her, she can stay in the race, if for no other reason, to support be an alternate voice for the party. To me, it's interesting and something to watch, not necessarily for long-term success, but who's to say what's going to happen as the courts continue to do their work and make decisions about these indictments going forward.
Lisa, I saw Mike Johnson paid a visit to Mar-a-Lago. He tweeted a photograph of himself with the former president. Will he make a similar visit to Nikki Haley?
Oh, I don't think so. I mean, I think he's pretty clear about who where his loyalty is and where he's already made an endorsement, Joe. So I don't necessarily think that he's going to do any outreach to Nikki Haley unless something dramatic happens. It's crystal clear that the House Republican leadership, the Senate for the most part, they've all sort of shown their loyalty to the front runner. And that's true of any elected Republican if they want to be taken seriously over the course of the next couple of months, because it's crystal clear that Donald Trump will definitely be the nominee. And I think, to Chris Lasavita's point, it will be sooner rather than later.
I didn't really think he'd be meeting with Nikki Haley, Jeannie. Joe Biden probably won't either. But we're in a pretty interesting world here when this campaign could essentially just go on mothballs for months, waiting for July and whether Donald Trump has trouble in court. That's pretty much what we're talking about here, isn't it?
It is. Joe, I thought you were going to mention what the Biden campaign, I think they tweeted or X'd it out. They said that this was, Mike Johnson meeting with the Speaker of the House, and they showed the picture of the two of them meeting, which was pretty good. Yeah, Joe, good news. We are in potentially for the longest general election fight of our lives. So, gear up. It's going to be a long one.
When Jeannie says that, the wave of exhaustion just flows through the newsroom. That's what we're here for, though, and we are in for the cycle with Jeannie and Lisa today. A great panel, and we're going to talk about a bit more about what Joe Biden is up to in the sneakers. Did you see the golden sneakers? We're getting fundraising numbers out today. Donald Trump's hoping he'll buy a pair and help the campaign. The deadline's at midnight. We'll have more next with the panel here on Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Walmart topped earnings estimates in the fourth quarter. Walmart shares are advancing now by 3.25%. Separately, Walmart said it has agreed to buy smart TV maker Vizio Holding Corp. for $2.3 billion. The deal will accelerate the retailer's ad business called Walmart Connect and help Walmart and its advertisers engage with more customers. Another Dow member out with earnings today, Home Depot. It reported a fifth consecutive decline in revenue on weak demand, underscoring a drop in demand for home improvement thanks to higher interest rates and a slowdown in construction. Drew Redding is with Bloomberg Intelligence. He told Surveillance this morning the environment will continue to be challenging for the consumer through this year.
I do think that the consumer is under greater pressure, and at the same time, I think that the home improvement industry has some unique factors going on because they're so tied to what's happening in the housing market. And, you know, as we've seen over the last year and a half, housing is just frozen at this point, and transactions are completely depressed, and we think that keeps a lid in the near term on demand.
And again, Home Depot shares lower by 0.4%. By the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Capital One Financial is buying Discover Financial Services in a $35 billion all-stock deal to create the largest American credit card company by loan volume. Shares of Discover Financial, they are surging today, up by 14.2%. As for Capital One, it's higher as well, up by about 0.6%. Bayer, out of Germany, plans to slash its dividend by 95% in an effort to dig itself out of the hole created by the acquisition of Monsanto. Those are our top company stories, and this is Bloomberg.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
Live from World Headquarters in New York, Kaylee Lyons will join the conversation from Washington in just 5 minutes. Thanks for being with us here on the fastest show in politics. So what do you do a day after you're ordered to pay $350 million from a judge in New York? Well, you launch your own sneaker line. Did you see the gold Trump sneakers over the weekend? I feel like there's been some pretty irresponsible, poor reporting around this important story. There are several sneakers in the line of shoes here. Not just the Never Surrender high top, that's the gold one for $400, but they're also a pair of athletic shoes. Feature a T and the number 45 on the sides, priced at only $199. We also, guys, have a perfume and cologne. Victory 47 is the scent. I wonder if it smells like napalm. Let's reassemble the panel for their take on this. Jeannie Shanzano and Lisa Camuso-Miller didn't realize they'd be weighing in on this when they got up this morning, but it comes with real news. We've got a fundraising deadline here. And as President Biden heads out to California to raise money for the week, he's showing some pretty big bucks here. Raised $42 million for the campaign and the party in January, $130 million in the bank. And so, Jeannie Shanzano, I ask you, can Trump make up for this by selling sneakers?
Yeah, how many sneakers does it take to pay back the over $400 million in legal fees that you owe? It's a lot. And Joe, I had visions that maybe I could get a pair and show them to you, but I haven't gotten my pair yet.
They're only pre-order right now, Jeannie. The time will come for you to wear them on the air.
And I will hold them up and show you, Joe. You know, it was funny because I never heard of SneakerCon. I'm not a sneakerhead. I never heard of this. But I love the fact that they were boos and groans when he came out because they take this seriously. And they said, these are a little bit too much like the Nike and the Jordans of the past. And
don't fool around with the conventions.
That's right.
My kid was at KatsuCon over the weekend. If you could have seen all the kids with pink and blue hair at the airport trying to leave town, Lisa, it does make you wonder if there's an audience for pretty much anything here. How about $400 Donald Trump sneakers? You know these are selling out.
He's got to sell $1 million in order to pay that.
That's right.
That decision from the other day. Well, I mean, look here. This is on brand for Donald Trump, right? Mm-hmm. He's had ties. He's had champagne. He's a marketing guy, and he knows how to do this. So I mean, Jeannie, I'm excited for you to have $400 sneakers, but that's not necessarily in my budget. But I will say, too, that it's going to be interesting to see how many other opportunities he and the marketing team come up with in ways to get people to donate and to get involved. And that's, you know, it's hard for me to understand how that's happening in politics because it's so unlike anything we've seen before, but that's really on brand for the former president.
It is. It's not Trump steaks or Trump ice, Trump water, so many other lines that he's delved into here, Jeannie. It's the sneaker business. Does it matter that he got booed at the main event here in which they were released?
Oh, I don't think so. You know, I heard from people in the know that they pretty much boo everyone. The Philadelphians assembled at the sneaker con. So I don't think we heard him at the polling booth. I am waiting for the dark Brandon sneakers to come next.
Right, there you go.
I think, you know, this campaign might end early, but it will be fun.
And that's what we're here for, by God. If it has to be depressing, at least we can make it fun. The world of politics as we know it. We're going to have a lot more on the fundraising, exactly what Joe Biden raised and what the Trump campaign and the RNC have on their side. We do have a disparity as a lot of this money is going to attorney's fees, to legal fees for Donald Trump. Some pretty interesting numbers out today, and we're going to get more as we work our way toward the midnight deadline here with the President of the United States in campaign and fundraising mode this week on the West Coast. As I mentioned, Kaylee Lyons will join us coming up from Washington, D.C. in a conversation ahead with the former governor of Virginia, Jim Gilmore. It's next with Hour 2 of Balance of Power. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Nikki Haley braces for a loss in her home state. Welcome to the fastest show in politics. With new numbers today from South Carolina showing a big win ahead this weekend, likely for Donald Trump. Kaylee Lyons with me now from Washington, D.C. South Carolina, Kaylee, was still weeks away when we were covering Iowa and New Hampshire. Now just 4 days of campaigning left.
Yeah, not a lot of time to change minds, and that may be problematic for Nikki Haley when polls, as you mentioned, Joe, show her 20 points plus behind the frontrunner in the state in which she used to be governor. It could be pretty bruising, and yet she says no matter what happens in South Carolina, she's sticking in this race.
That's for sure. We're going to talk to Nancy Cook about that. Of course, Bloomberg politics reporter who spent a lot of time on the trail leading up to South Carolina, Kaylee, and we've got matters on Capitol Hill to deal with. Of course, there are no matters happening on Capitol Hill. Lawmakers all left for 2 weeks.
Yeah, I'm pretty much alone in Washington since you're in New York and everybody got out of town. They won't be returning until February 28th. That's okay. Nancy's actually here with me, so I'll have some company in just a few minutes. But it's such a great point, Joe, especially in light of developments we have seen in recent days, the death of Alexei Navalny in Russia, the Munich Security Conference in which American allies were very vocal in their concern that the U.S. support for Ukraine may be waning. And it's unclear if we're going to have Congress addressing Ukraine when they even return, because they're pretty quickly going to be staring down a deadline to avert a shutdown on March 1st.
That's right. We're going to talk to the former governor of Virginia about all of these issues. Jim Gilmore straight ahead. Kaylee, we've got a lot to do this hour.
Absolutely, but we should probably check on the markets first, right, Jeff?
You said it.
Here's what's going on. Happy Tuesday to you all. We have got the Dow, the S&P, NASDAQ 100 index. We'll throw in the Russell 2000, all very much in the red. Back to work Tuesday with the S&P now down 40 at 49.64. So the S&P trading below that 5,000 level. A drop right now of 0.8%. We got big tech dragging the market down ahead of NVIDIA earnings tomorrow after the bell. NVIDIA shares down now by 6.2%. Dow Industrials down 93, dropping drop there of 0.2%. NASDAQ Composite Index down 233, a decline of 1.5%. 10-year yield 4.25% with a 2-year that's yielding 4.58%. Spot gold today higher by $11 the ounce to 2,028, up 0.6%, while West Texas Intermediate crude higher, a little changed, up now by 0.1% at 2,028 the ounce. Right now, we have got shares of Home Depot falling 0.2%. Home Depot reported earnings this morning. Walmart also reported, another member of the Dow. Walmart today up by 3.2%. Again, recapping stocks lower with the S&P down 41 right now, drop of 0.8%. I'm Charlie Pellet. Back we go as Balance of Power continues. And once again, Kaylee Lyons and Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to the fastest show in politics. It's the Tuesday edition of Balance of Power. Kaylee, I keep thinking it's Monday, and I'm guessing I'm not the only one out there who's having that problem.
I'm glad it's not.
I'm so glad it's not. But you know, the shorter weeks feel longer than the normal ones, and I haven't figured that out yet. Pick your poll. They tell the same story today. Emerson's out with numbers from the Hill. Suffolk is out with numbers. They ran with USA Today. We saw Winthrop. We've been through a couple of these in South Carolina. Kaylee, they all tell the same story.
Which is that Nikki Haley is going to lose, at least if the polls are correct, pretty badly to Donald Trump 4 days from now in the South Carolina primary. That said, Nikki Haley says the outcome doesn't matter. She's sticking around for the time being. And also, interestingly, Joe, as we hear her sharpening her criticism of Donald Trump, the frontrunner, as we have gotten further into this primary cycle, she also says that essentially right now she's just saying the quiet part loudly. Listen to some of what she said in her State of the Race speech in South Carolina earlier today.
Of course, many of the same politicians who now publicly embrace Trump privately dread him. They know what a disaster he's been and will continue to be for our party. They're just too afraid to say it out loud. Well, I'm not afraid to say the hard truths out loud.
So joining us now for more on this, here with me in our Washington, D.C. studio is Bloomberg national politics reporter Nancy Cook. So, Nancy, it's worth pointing out here that Nikki Haley hasn't essentially been saying this out loud for the entirety of this race. It's pretty new, in fact, that she's saying some of these things about the former president. Is it too little too late for her?
I mean, kind of, yes. I mean, she really has decided to tank Trump on directly, really just in the last month or so. Before that, she was very cautious. This fall, we saw that she was very cautious. I think at this point, she is just trying to set up a contrast between her and the former president. And I think that, honestly, what we're seeing here is her playing a much longer game about, if there is some sort of health scare or the former president's legal troubles catch up with him, she will be the alternative. But we are really expecting him at this point to clinch the nomination, probably by the third week of March.
Hey, Nancy, it's good to see you. I wonder when we talk about the psychological impact, if it's just impossible to know what that will be following South Carolina this weekend, because as we've been discussing for days and weeks now, the conventional wisdom is Nikki Haley just kind of hangs out for the spring and summer and waits to see if something goes wrong with the Trump campaign. But what about 2028? What about her future career if it doesn't work out in this campaign? Does a loss that bad, a 30-point loss in your home state, keep you from doing other things in the future based on the message that you're sending, the embarrassment that comes with it?
Not at all. I think that will be a big part of what she'll do. I think that she will, is really positioning herself to run in 2028. She will have been the last Republican standing against Donald Trump. And you have to remember that if Trump loses to Biden in the general election, which is months away, Nikki Haley can say, I told you so. She's also in her early 50s. She's so much younger than Trump and Biden. And I think that she has like a long political life left in her. So I think part of this is also positioning for 2028. I think Governor Ron DeSantis of Florida is doing the same thing. He just announced he's going to be in South Carolina tomorrow. So I think that, everybody who dropped out is really trying to say, hey, hold on, I'll be there in 4 years.
Well, of course, for Nikki Haley as well, we have to consider that she does have the resources to keep this up for a while as she's continued to pull in money from donors. When she was speaking in South Carolina earlier, I was watching some of her remarks. It was notable she actually got choked up when talking about her husband, Michael, who is currently deployed to Africa Africa, her second deployment. She says she was speaking about how hard it is on them as a military family. When Donald Trump has effectively questioned where her husband is at times, she says is disrespectful of military members and military families. Given South Carolina is a pretty military-heavy state, are we expecting that to have an impact come primary day?
I think it could have an impact. I mean, just with people who don't already like Trump. I think Trump is going to hold on to that 30% base of the Republican Party who really likes him no matter what. But I think that there is an opportunity for Nikki Haley to pick off voters who are college educated, in some of these wealthier areas of South Carolina. And so that's what I will be looking for, not just like, what is the margin between those two with the primary, but also what types of voters does she end up appealing to in South Carolina?
Hey, Nancy, we're going to talk later on this hour with our political panel about Joe Biden's fundraising prowess. He's on his way to a week on the West Coast, raising money in California, but ahead of the deadline, he's reporting $42 million for the campaign and the DNC. He ends January with $130 million in the bank for his re-election effort. Joe Biden is winning the fundraising wars here, is he not?
He is, and I talked to a bunch of donors after that special counsel report that raised questions about his age, and a bunch of Democratic donors said, look, we think that he has been a good president, and as long as Trump is on the ticket, we will keep funding Biden. It's not so much like a gift to Biden or a full vote of confidence in himself as it is a donation to just an anti-Trump coalition. Mm-hmm. These Democratic donors do not want Trump to be president again, and they are willing to keep funding Biden's bid because they're just freaked out by that. And we've seen he's had a lot of success with fundraising in New York, on the West Coast, in Florida. Fundraising has not been a problem for the Biden campaign.
Well, that's for sure. And we're going to hear about the others coming up in short order, whether it's the Trump campaign or the parties. Nancy Cook, great to see you. Great reporting as always. Bloomberg senior national political correspondent. Find Nancy on the terminal and at Bloomberg.com. Kaylee, this, of course, is a huge story going into South Carolina. But immediately after that, we're going to turn our focus to Super Tuesday. And here in Washington, there's still a conversation about geopolitics, about funding our allies abroad that has yet to be resolved. In fact, it's very much up in the air after lawmakers went home for 2 weeks without crafting a budget, without passing aid for Ukraine, Israel, or Taiwan.
Yeah, absolutely. And Joe, that is something that the current incumbent president, Joe Biden, is keenly aware of. He's putting a lot of pressure on Congress in recent days, especially in light of the developments of recent days, to pass Ukraine aid that he essentially says is badly needed. Mm-hmm. Just take a listen to the president over the weekend.
We're making a big mistake not responding. Look, the way they're walking away from the threat of Russia, the way they're walking away from NATO, the way they're walking away from meeting our obligations, it's just shocking. I've been here a while. I've never seen anything like this.
The president, as he was leaving the White House, as Kaylee mentioned over the weekend, we've heard this line from him a couple of times, calling it bizarre that they would leave town. Remember his news conference at the end of last week. We had the voice now of Jim Gilmore, the former governor of Virginia, is with us, former ambassador to the Organization for Security and Cooperation in Europe and former chair of the RNC. Governor, it's great to see you. Welcome back to Bloomberg. What's going to happen when lawmakers come back to town and have already spent a couple of weeks at home hearing from voters on this, watching headlines from Ukraine as areas fall to the Russians? Will there be a different feel in the air?
Well, I don't know, but I know there should be. I think it's absolutely urgent that the Ukraine financing pass. All the false narratives that have been out there about how we have to look after our border and we can't look after the Ukrainian border. These are all false messages. Some of them are being created by the Russians in order to try to work on the minds of the American people and to destroy our resolve. It's absolutely essential that this Ukrainian support pass. And I might say to you, Joe, that this is a failure of national leadership everywhere. We're not seeing the national leadership anywhere to completely explain to the American people the truth and how absolutely vital this war in Ukraine is to the safety of the United States of America. We're not seeing it out of the Congress. We're not seeing it out of the Senate. We're not seeing it out of the presidency. This has to happen. It has to happen, and there has to be an explanation as to why, and you have to expose some of these false rumors and myths that are being put out there to try to destroy American resolve and leadership.
Well, you say that Russia may be behind some of these rumors and myths, but are they not being propagated by certain Republicans, including the Republican frontrunner for the presidency, Donald Trump, who has the ear of Speaker Mike Johnson?
Well, I can say this. When I was the ambassador in Vienna on behalf of the United States in the Trump administration, nobody in the Trump administration ever told me to let up on the Russians. And I don't foresee that when President Trump is reelected again, that he's going to back away from NATO or back away from anybody else. I think American leadership was stronger then than it is now. But Kaylee, I want to repeat my message. We're seeing a failure of leadership everywhere by everybody. The American people are entitled to know the truth. And the truth is that this is vitally important to America's safety and national security and for the future.
Well, let's get to what else should be done here. Then Governor Joe Biden has delivered a couple of speeches, one of them in prime time from the Oval Office, to speak to the dangers around the world, the risks that we face, and the need to help to fund our allies, whether it be in Ukraine, Israel, or Taiwan. We understand that there's a very different conversation that's been having in the House of Representatives. We even heard Donald Trump say a couple of weekends ago that he would let Russia, in his words, do whatever the hell it wants to our allies who don't meet spending goals in NATO. This does seem to be two different conversations, no?
Yeah, I think that what the President Trump is doing is putting pressure on the NATO allies to step up to the plate. My report to you is the truth, though, which is they are stepping up to the plate, and largely because of President Trump's pressure when he was president. And I think these statements that he's making now are intended to do that. But the key point is that American leadership is necessary, and we do lead, and people look to us for leadership, and it has to happen. But right now, I think we're not seeing the proper messaging out of Washington by anybody.
Well, and that messaging or lack thereof certainly is noticed, received by our allies. Of course, we saw the Munich Security Conference happening in recent days where a lot of American allies expressed concern about the direction of the conversation here domestically, what it could mean for the future of alliances, the future of U.S. participation and support for allies in Europe. What should they be thinking of the United States at this moment? Are their concerns not founded in real threat?
Listen, the real threat is certainly there. This is a Russian fascist dictatorship that is committing aggression. I have to talk about Navalny for a second. This is a murder of Putin's principal leader. Whether he was frozen to death in the Arctic gradually and starved to death or submitted to illness, or whether he was directly accelerated in a murder through some type of activity up there in that remote place. That's an important message to the people of Russia, to the people of Europe, and it ought to be an important message to the people of the United States, that this is what's in our future if we don't step up and do something right now. But you're right about this, that the messaging, I think, needs to be strong. Our European allies, I worked with them every day while I was in Vienna on behalf of the United States. Their best interest for their citizens all across Europe is to follow American leadership. If American leadership falters, they will do the best they can for their citizens, just like we do for our citizens. And that means that there's risk up the road that they'll compromise. We can't allow that to happen. Russia cannot succeed in this attempted conquest and subjugation of Ukraine, trying to reassemble the Russian Empire. If he does that, he threatens Europe, and eventually that threatens the United States of America.
Would it have helped, Governor, if Donald Trump, the former president, in his statement about the death of Alexei Navalny, had in fact condemned Vladimir Putin? It didn't even mention his name.
Well, I'm certainly doing it. I mean, I think that right now that all of our national leadership needs to be as vigorous and strong on this as possible and explode some of these myths. Listen, we have a right to know that the money that taxpayers send to Ukraine is being properly spent. And that means that information has to be shared. The Zelensky administration has to be at pains to get that information to the American taxpayer if he wants taxpayer money. It means that the national leadership from the White House has got to be explicit about addressing these issues. You have to explain that the American border is important, but it's really a different issue from Russian aggression in Europe. America's a great power. We can do all of these things appropriately, but it requires leadership both internationally and here in the United States.
All right, Ambassador Gilmore, thank you so much for joining us. Always great to get your insight as the former United States ambassador to the Organization for Security and Cooperation in Europe, and of course, also former governor of Virginia and former RNC chair. Quite a moment we are in as we hear the ambassador talking of grave geopolitical risk, and yet Congress, it's unclear whether or not they want to do anything about it. We'll have more coming up for you next on Balance of Power on Bloomberg TV and radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are trading lower. In fact, right now we are very close to session lows with the S&P 500 index down 39 now at 49.66. That is a drop of 0.8%. Dow Industrials down 86. moving lower by 0.2%. NASDAQ, though, hard hit today, down 1.4%. Big tech is dragging the stock market away from records. This ahead of NVIDIA results tomorrow. NVIDIA shares, they are down now by 5.7%. 10-year yield, 4.25%, with a 2-year right now at 4.59%. Spot gold is down up 0.5%, 2,027 the ounce on gold, while West Texas Intermediate crude up 0.4%, 79.49 right now for a barrel of WTI. Capital One Financial is buying Discover Financial Services in a $35 billion all-stock deal. Capital One Financial shares, they're up now by 1%. The big news, though, Discover surging by 14.1%. Recapping, stocks are lower. S&P now down 38 points, drop there of just about 0.8%. Balance of Power continues, and once again, your hosts, Kaylee Lines and Joe Matthew.
All right, Charlie Pellet, thank you, and welcome to the Tuesday Feels Like Monday edition of Balance of Power. I'm Joe Matthew at World Headquarters in New York. Kaylee Lines at Bloomberg's Washington Bureau. Political news is funny, Kaylee. It's not always what the headline says. We spent the whole weekend talking about Donald Trump's $400 gold sneakers, and he knows how to plant the story, right? I don't know if you've got your pre-order in. It was Joe Biden's fundraising, though, that was the real news.
Yeah, because he's done a lot of it. In the month of January, Joe, $42 million has been pulled in for his reelection campaign and the Democratic Party more broadly. So he ended January with $130 million in the war chest. That's pretty significant, actually a record amount for a Democratic candidate at this point in the calendar.
That's for sure. It's one of the reasons why, the primary reason why he's in California this week as well, because Joe Biden is in fundraising mode. And Kaylee, we spent all last week talking about how much money Donald Trump is spending on attorneys. He, for what it's worth, has not put up his numbers yet. When we get to the deadline, we'll see them. But he's likely to run out of cash because of all the court cases by July as Joe Biden continues to put checks in the bank. It's a pretty interesting phenomenon.
Indeed, as we're thinking that Trump is going to have to pay out more than $400 million in damages to E. Jean Carroll and then the state of New York for those 2 civil trials. And then you have to pay all your attorneys, and he spent more than $50 million in campaign funds doing that in 2023. So definitely a difficult financial picture for the former president. For the incumbent president, though, maybe a better one. The question is, can you put all that money to use to actually benefit in a race where a lot of polls show you behind Donald Trump at this point? So on that note, let's bring in Bloomberg politics contributor Jeannie Shanzano alongside Lisa Camuso-Miller, former RNC Communications director and, of course, host of the Friday Reporter podcast. So, Jeannie, first to you, what's all the money worth if it's not deployed appropriately? Is the Biden campaign doing a good enough job right now of spending it?
Yeah, they have time. They're going to be spending it. What they're doing right now is this fundraising machine, essentially. It has been a juggernaut, as you said. The most we've seen out of a Democratic candidate at this point. This is the biggest haul since April of last year. And there's one number in particular that stands out. 97% of these donations were under $200. That is very, very impressive for the campaign. These are not just all big time, big funders. These are small money donations. And also to add to that, the fact that they raised in the 3 days after Iowa, $1 million per day. That speaks to where this money is coming from. And Nancy Cook said it earlier. A lot of this is coming not necessarily because people are so excited about Joe Biden, although they may get there as we move forward, but because of Donald Trump looking like he is going to be the nominee of the Republican Party and a real intent on the part of people funding the Democrats to stop that. And so they are out there doing the hard work now of raising the money. And then to your point, they're going to have to spend it wisely.
Well, we promise context here at Bloomberg, and it's worth throwing some on this particular story here. Just to reset what Kaylee mentioned, $42 million in January for the Biden campaign and the DNC. That means $130 million in the bank now. That actually still trails what Donald Trump and the RNC had in the bank in 2020. Not so much this time. The RNC started the year with over $8 million cash on hand, and Donald Trump hasn't put up his his numbers yet here. He was coming in with $33 billion. They will have their totals up for January. Context, Lisa, formerly of the RNC, you understand how this works. What are the conversations like inside the halls and the offices at the Republican National Committee, knowing how much money is going to Donald Trump's lawyers?
Well, you know, Joe, it's really hard to compare. It's like comparing apples to oranges, because when I was at the RNC, there was a bit of a different structure in the way that this, the financing was happening, right? And there are so many other third-party groups that are involved in all of this that it's hard to really sort of compare the two. But what I will say is that the party itself is on the verge of transition. There's no question about it. Anytime a nominee is getting ready to come into their own and be at least the incumbent, or the one that is going to be the candidate that will run for the platform, it's time for a change. And I suspect that that is what's going to happen at the RNC. And sometimes breathing new life into the RNC and into the political parties does reignite sort of the interest and the fundraising piece of that. The one segment that's sort of different that we really can't even sort of factor in, because it's also brand new, is all of these extra expenses, the legal expenses, to your point. So I think what we're going to have to watch is sort of how that all unfolds. The one thing I'll say, though, is that what's different about these rulings and what's different about Donald Trump is that he is someone that knows how to leverage one item over another, right? He is someone who has very often figured out how the system works, and he has used it to his advantage to raise more money on the business side. So I suspect he's looking for all of those angles on political side as well. The one thing I'll say for certain is that this is going to be the most expensive presidential race we will see in our history, in our lifetime. They're going to set records this year. And so that's sort of indicative of what we're seeing on the Democrat side, the most money in a war chest for an incumbent president on the Democrat side. And I suspect that the money is going to continue to pour in for Donald Trump as well. And obviously, he's using resources and different means like selling $400 shoes to make that happen.
Yeah, that's absolutely true. But Lisa, to your point about how there are all of these other factors like his legal fees at play now, I wonder if ultimately everything turns out fine for the financing of Donald Trump and his presidential bid. What suffers perhaps is every Republican down the ballot who isn't going to be able to tap into RNC resources at a time when the Democratic Party may have more resources to go around. Is that really where we're going to see the impact here? Not at the presidential level, Lisa, but for everybody else who's trying to get a piece of the pie?
Haley, it's hard to know because there are other fundraising operations within the political structure, right? There's the National Republican Congressional Committee, there's the Senate Committee, there are lots of other political arms that are also doing some tremendous fundraising. And that fundraising is sort of operated not necessarily from the top of the ticket, but from the top of the U.S. Senate. So through Mitch McConnell and his political operation, as well as Mike Johnson, who is also raking in millions and millions of dollars. There's been a lot of support for him over the course of the last few weeks since he started just 6 weeks ago. So some of that, I think, as much as there may be impact down ballot, I think more often than what we will end up seeing is that people will be making choices about where they're sending their money, whether it's to the RNC or if it's to the other political operations within the structure of the political parties.
Jeannie, we need to talk about Michigan. This is not being widely reported because Joe Biden's going to win the primary. It's a week from today, by the way. We're obsessing over South Carolina. Michigan's a week from today. And there's a movement to get Democrats to vote uncommitted next week. This is a movement that has the backing of Congresswoman Rashida Tlaib. There's a separate Abandon Biden campaign launched by Muslim voters who formerly backed Joe Biden. Without the Arab American, Muslim American vote, he would have lost Michigan in 2020, Jeannie. And because of what's happening right now in Gaza, he could lose them this time around. What happens in Michigan next week?
Yeah, it's got to be a big concern to the campaign. I mean, the idea that you have a Democrat in Rashida Tlaib urging Democrats in her home state to vote uncommitted against an incumbent president, you know, that is very unusual. But I think it speaks to your point about what a big issue this war with Hamas and Israel is domestically. I mean, normally we would say, foreign policy issues don't play big in presidential campaigns. They usually don't. This is something different, particularly on the Democratic side. We're going to have to wait and see what happens in Michigan. There is a large population of Jewish Americans as well in Michigan, but the impact is real because, of course, Joe Biden won that very narrowly last time around, and he needs to get out the vote. I would also watch out for people, particularly in the African American community, who have been empathetic to what's happening in Gaza and who are looking in particular at people like RFK Jr., who is out there talking about issues they care about, like the environment. And so you couple those together, and this is a big challenge for Joe Biden. And, you know, he'll win Michigan, but the question is, if we see a drop in people turning out, that is a warning sign for Democrats.
Great panel, great conversation with Jeannie Shanzano and Lisa Cabuso Miller. Great to have you, both of you with us, I should say. Kaylee, forgive me for interrupting here. When we look back to 2020, just for the context on Bloomberg here, Joe Biden won by 155,000 votes, including the vast majority of the state's 200,000 Muslim voters. That's the number, 200,000.
Mm-hmm. Yeah, it's a very small number when you think about the electorate as a whole, Joe, and it just goes to show you how close these swing states are and how issues like this really could matter. And interesting to have this conversation on a day in which we've just seen the United States vetoing a UN Security Council resolution to call for an immediate ceasefire in Gaza. Yes, it's because the U.S. is trying to continue to pursue a diplomatic answer, exchange of hostages held by Hamas for a ceasefire of some period of time, which obviously hasn't happened yet. But optically, at least for the president, could be pretty difficult, the news today.
Kaylee Lyons, my partner in Washington. I'm Joe Matthew, at least for this week at World Headquarters in New York. I'm glad you're with us here on Balance of Power. Let's bring you up to date now. On world and national news, we go back to the Capitol. Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The Biden administration says it will be toughening sanctions against Russia following the death of opposition leader Alexei Navalny. The White House says it will be putting forward a major sanctions package on Friday. National Security Advisor Jake Sullivan says it will cover the Russia Defense Industrial Base. The U.S. has vetoed a UN Security Council resolution that called for an immediate ceasefire in Gaza. This comes as President Biden faces mounting pressure to dial back support for Israel. U.S. Ambassador to the UN, Linda Thomas-Greenfield, says the country could not support a resolution that would put sensitive hostage negotiations in jeopardy.
This hostage deal would bring an immediate and sustained period of calm to Gaza for at least 6 weeks. And from there, we could take the time to build a more enduring peace.
Thomas Greenfield also said that allowing a humanitarian ceasefire like the one proposed would empower Hamas and would also deprive people in the region the security they deserve. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks continue to trade lower. In fact, the S&P 500 index very close to session lows right now, dropping 45 points, back below 5,000 at 49.60 on the S&P, a decline right now of 0.9%. Dow Industrials down 0.3%, lower by 109 points, while the Nasdaq Composite Index is down 239 right now. That is a drop of 1.5%. 10-year yield 4.25%, with a 2-year right now at 4.59%. Spot gold higher by 0.5%. Gold up $9.73 the ounce to 2026, while West Texas Intermediate crude is up 0.2%, $79.34 a barrel. Big tech dragging the stock market lower as Wall Street awaits NVIDIA's earnings tomorrow for confirmation that the chipmaker can meet the lofty expectations set by the AI boom. NVIDIA shares, they're down now by 6.1%. After earnings, Walmart shares up 3.3% after earnings. Home Depot little changed, up less than 0.1%. Again, recapping, stocks are lower with the S&P down 42, down 0.9%. I'm Charlie Pellet. Balance of Power continues. Back we go once again. Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much. Welcome back to Balance of Power, live from Washington and New York today on Bloomberg TV and radio. And a red headline just crossing the Bloomberg terminal. The U.S. has told allies that Russia could deploy a nuclear weapon or a mock warhead into space as early as this year, so potentially in 2024. Quite the news to see, Joe, especially in light of remarks we got from Russian President Vladimir Putin earlier today, where he denied U.S. allegations that he's planning to deploy a nuclear weapon in space. He says he's always been categorically against it and are now against the deployment of such things, and that the U.S. is saying, though, that they could do just that as early as this year.
Yeah, the always credible Vladimir Putin weighing in. Kaylee, if this is true, a nuclear warhead in orbit, which is apparently what we're talking about, would violate the 1967 Outer Space Treaty. That is so 60s that we called it the Outer Space Treaty, to which Russia is a signatory here. So this all goes back to that statement, remember, with Mike Turner, the chair of the Intelligence Committee last week. We had no idea what he was talking about, and you wonder if this would be public if he hadn't done that.
Well, that's an excellent question. Of course, the call from the chair of the Intelligence Committee was for the White House to declassify information related to an unspecified threat. Of course, that forced the White House to get a little bit more specific about what the threat really is. And we know that this technology theoretically is supposed to be an anti-satellite weapon, something that could be disruptive to all of the thousands of satellites that are up there orbiting in outer space, as you say, Joe. But really just fascinating to see this story unfold. We weren't talking about this at all until about a week ago.
Yeah, we add another one here, and just the ridiculous number of stories that we're following. Only 4 days out from South Carolina, arguably the top political story today, Kaylee, but it's pretty hard to make those calls on a daily basis lately with so much noise. This is huge, though, for Nikki Haley. It's huge for Donald Trump. And we have new numbers today. In fact, a couple of polls, and one specifically we're looking at from Suffolk University, USA Today, who were just absolutely great in Iowa and New Hampshire. That's, of course, pollster David Paleologos, who we want to talk to here. Donald Trump leading Nikki Haley in her home state by almost 2 to 1. It's 63% to 35%. Remarkable numbers for this stage of the campaign. And we do turn to David Paleologos. He is the director of the Suffolk University Political Research Center. David, this is shut down. Your poll agrees with a lot of other polls that we've seen in the last couple of weeks where Nikki Haley couldn't possibly win her home state. How bad is this going to look?
Well, we never say impossible, as you know. We say highly improbable, but it doesn't look good at all. I mean, this is just awful for her in her home state, two-term former governor of South Carolina. You know, worse than Iowa for her, worse than New Hampshire. And if this margin holds up, I mean, there are some polls out there that have it 2022, others have it in the 30s. I think the 28 number is pretty close. We'll see what happens on election day. But again, and you know, South Carolina, like New Hampshire, anybody can vote. So obviously Nikki Haley is winning big among Democrats. provided they didn't vote in the Democratic primary, and winning comfortably among independents, but getting crushed among those who matter, which are registered voters who see themselves as Republicans.
Well, and then when you break down the demographics within that group of voters, David, it doesn't look like she's winning any of them. Former President Trump holds double-digit advantages among men and women in every age group, among both high school graduates and those with a college degree. So there is no demographic within the Republican Party that Haley is winning outright, right?
Well, there's two that she's winning, I would say. One, she's winning within the margin of error, but there are two. One is those people who have political ideology, moderate to liberal. She's winning by about 20 points, 59-38, among that particular group. And also she's winning comfortably by more than that among people who say that the future of American democracy is the top issue. Now, future American democracy was not the number one issue, it was the number three issue. So that doesn't get her very far as the number three issue. And Trump was winning by over 50 points among people who said immigration was the most important issue. That was the top issue. And secondly, he was winning by almost 35 points among second most important issue, which is the economy. So very little wiggle room, if you will. She needs a massive influx of moderates, liberals, Democrats to storm the polls on Saturday. But again, from what we can see in terms of who made it through the screen about being either a very likely voter on Saturday or somebody who had already voted, Trump is poised for a big win.
David, Nikki Haley delivered a State of the Race speech today in Greenville, and she opened it by announcing that she was not dropping out, and which should really give you a sense of where we are. But she said more than that. Listen to Nikki Haley from earlier today.
Of course, many of the same politicians who now publicly embrace Trump privately dread him. They know what a disaster he's been and will continue to be for our party. They're just too afraid to say it out loud. Well, I'm not afraid to say the hard truths out loud.
Would it have made a difference, David Paleologos, if she said the hard truths out loud earlier? And is she arguably doing damage to her brand now, knowing that she needs to convince Trump voters if she's going to get anywhere?
I don't usually do a lot of commentary on races like this, but I really do agree with you. I don't understand it. I think if she had gotten out and endorsed him today wholeheartedly, I think she could maybe make the case that she helped deliver a big win for Trump in her home state of South Carolina and potentially setting herself up for a viable 2028 run or 2032 run. But this just seems just so ill-prepared and hopeless to me. If you're not showing up in those early primaries and caucuses in any way, it's like my class. You have to show up in my class and participate to get points, 4 points every class. The student doesn't show up those first 4 classes, they're already down 16 points to the other students who have. And so then how does that student justify getting an A in the class? No matter how much extra credit they do, no matter how well they ace these other metrics in my class, and there's no way that she's going to ace any states if she can't win her home state. I mean, Michigan comes 3 days later. You have got the primary and then the Michigan caucus because they have that split up. And you've got other races and on Super Tuesday. Even in Massachusetts, I thought she had a chance in Massachusetts to potentially pull an upset. And she's double digits. She's down in Massachusetts, even with 60% independents and 10% Republicans.
Wow.
Yeah, but tough picture. But we always appreciate you joining us. David Paleologos, Suffolk University Political Research Center Director, thank you for your time. And as he talks about attendance in his class, it also raises the turnout question, Joe. How many people are going to show up and actually cast a vote in the primary when his poll shows that more voters are more enthusiastic to cast a ballot for Trump?
I think I would have failed David's class. I think I would have gotten out to vote, though, Kaylee. This is Bloomberg.
This is Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
There are 7,800 operational satellites in Earth's orbit. I did not know that until today because I'm reading our coverage here on the Russian space nuke that made waves about a week ago, and we're actually now getting some details on. I'm Joe Matthew at Bloomberg World Headquarters in New York. Kaylee Lines is in Washington, D.C. Goes back a couple of days, Kaylee, to this back and forth with the intelligence chair, Mike Turner, a Republican, who called out the White House for not making this information public. It appears they have.
Yeah, the White House saying that Russia is working on some anti-satellite technology. And apparently, according to our reporting in a red headline that crossed the Bloomberg terminal earlier this hour, Russia could be ready to deploy this technology to space as early as this year. That's right. It could happen in 2024. So for more on this story now, let's bring in Larry Liebert. He is an editor on our national security team and is joining us on the phone. So, Larry, realistically, we could be dealing with a pretty short timeline here, even though President of Russia, Vladimir Putin, earlier today says he does not want to use a weapon like this.
Yeah, he says Russia is categorically against it, but, you know, he also has been saber-rattling some on his nuclear arsenal during the Ukraine war, so not everybody takes his assurances as encouraging. Our reporters, Alberto Nardelli, Jennifer Jacobs, Katrina Manson, broke the story that the U.S. has told allies that Russia could deploy a nuclear weapon or a mock warhead, which would at least cause as much confusion into space during this year. That's a timeline that hasn't been reported before. And the question is, and there's been much confusion about this, as everybody, including President Biden, has said, this isn't a nuclear weapon in space that would be shot at people on Earth. It could, though, if it's up there as soon as this year, if it's for real and Russia chose to use it, could knock out satellite communications of all sorts. It would be a catastrophe because there are so many satellites we all depend on, like even GPS.
That's for sure. And Larry makes such a great point. We could be talking about a phony warhead for all we know. There's so much noise and misinformation coming out of Moscow that it's hard to really be specific about what we're talking about here, Kaylee. But Larry, this will be a big deal when the G7 foreign ministers meet in Italy in April. This will be top of the agenda, won't it?
Oh, well, I think so. I think it's going to hover over all the debates, including debates over Russia's intentions in the Ukraine war. The questions about the EU and U.S. support for NATO. All of these things tie together. And of course, I would say some conservative Republicans in Congress have said perhaps that there's some scaremongering going on here to have yet another dimension of reasons not to trust and to act against Russia, but it's certainly going to be an issue in front of mind.
Well, Larry, you mentioned the question around the future of U.S. support for Ukraine, whether or not Congress is actually going to pass billions of dollars in additional aid. Joe and I were speaking with former Defense Secretary Leon Panetta just last week, who essentially told us if Congress doesn't do that, President Biden needs to be looking at every possible option to continue aiding Ukraine. What real options are there if it's not passed by Congress?
It's a real good question, and understandably, our sources and those of other folks at the Pentagon and in the White House aren't eager to spell out any last gasp or desperate measures they could take. There's been talk of U.S. allies in Europe paying to buy and then replace weapons from the U.S. arsenal, which would really put the U.S. into a bigger position. They could continue to send certain weapons from U.S. stockpiles, but with no guarantee to replacing them, it really raises questions about the U.S. readiness in Asia, for Taiwan, and elsewhere. And so they really are holding firm, and even if they develop some workarounds, the situation is urgent from the perspective of Ukraine, and there's no way to do billions of dollars in weapons without Congress acting.
All right, Bloomberg's Larry Liebert, thank you so much for joining us on the breaking news that crossed this hour that the U.S. is telling allies that Russia could be deploying a nuclear weapon to space as early as this year. So that was the red headline we were dealing with this afternoon, Joe. But there also was a red headline that crossed the terminal yesterday. Bloomberg scooping Capital One's $35 billion deal to buy Discover and Discover Financial. And apparently it's gotten some notice on Capitol Hill from one senator in particular.
That, of course, would be Senator Elizabeth Warren, right? Not a shocker. I'm guessing you could have written the announcement, the news release for her. Not a fan of this idea. By the way, do we not love that Kaylee was watching the terminal on the day the market was closed? Because with me in the room, two other people who were as well. Carol Massar, Tim Stenevec. Carol's back. Great to see you. But you're that kind of student, right? You did your homework.
I did. But I have to say, sometimes when I take a day off, I do put my phone down. I'm not reading. But Kaylee,
to be
impressive.
Admired.
You make us all look crazy.
100%. Are you guys sinking into this story today?
Yeah, we're definitely digging into it. The M&A activity, right, Tim, this year, there's been a lot of companies making moves and doing deals.
Yeah, I think the question I have is if regulators do block this deal, how does it make it look for MasterCard and Visa? Does it make it look like they're favoring those two companies over Discover and Capital One? So they've got a tight tightrope to walk.
Yeah, absolutely. I wonder what Elizabeth Warren would say to that question when she's saying that this deal would threaten financial stability, reduce competition, and raise costs for Americans.
Yeah.
We'll have to try to get her on the program to answer that question.
That's an invitation. I love that. Yes, and I think we're overdue with the senior senator from Massachusetts. Kaylee, it's strange being here and you're being there, but I'm sure you'll keep things together in the Capitol, and I'll meet you back at 5 o'clock on Balance of Power. In the meantime, I get to do this in the room with Carol and Tim. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Radio and television, streaming on YouTube and Bloomberg Originals. Yes, indeed, this is Bloomberg Business Week. I'm Carol Massar, along with Tim Stenevec. And Tim, in terms of the overall market trade today, it's really big tech that is a bit of a drag.
Yeah, they're dragging on the equity trade. That's the macro equity trade, okay? Our focus this hour, all about the most read stories on the Bloomberg terminal. Among them, a few on our minds today, Carol. We talked about M&A just now with Joe and Kaylee. Discover Financial Services being taken out by none other than Capital One Financial. We're going to dive into that a little bit later in the program.
Right, biggest deal, global deal of the year so far. So really impressive. We're going to also get into Walmart's confirmation of buying Vizio. We got, kind of word indication that they would be interested last week. That company, the world's largest retailer, also out with earnings. So there's a lot to digest and pick apart when it comes to Walmart.
Okay, plus something we've been talking about for quite a bit now, how markets are increasingly
we
shifting.
got an early heads up on this.
We absolutely did.
Weeks ago.
Yeah, I think it's fair to say that after that hot jobs report came out.
But it's up to Liz McCormick to make sense of it all.
I know.
Put it in a great story.
We had her on Friday. You missed it. You were out.
I did
we
miss
had her on.
it.
She was great.
I'm jealous.
Yeah, the idea that, okay, we know March is off the table, but is the next move from the Fed actually going to be a rate hike and not a cut?
Talk about a change and shift in the narrative. All right, also we're going to get into the productivity boom. That's been a big assist to the Fed's soft landing goal. Another great story that is among the most read, this one by our Steve Matthews.
Okay, speaking of most read, we're going to tell you about the social media personalities who say that they were asked to promote a product that they, quote, never tried. And we're talking about some real important products here and a company that's really established out there too.
Another most read story on the Bloomberg. Lots to get to, folks, over the next 60 minutes. First up, though, let's get a check on the trade and those top business stories. Here is Charlie Pellet.
Hi, thank you very much. Welcome back, Carol Massar, and good afternoon, Tim. We have got the Dow, the S&P, NASDAQ, all in the red right now. Do want to begin with the developing story headlines right off the Bloomberg Professional Service. Federal Trade Commission and states are poised to sue over the Kroger-Albertsons deal next week. week. The FTC suit is expected to come before February 28th when the timing agreement expires. Right now, we do have shares of Kroger. They are advancing by 1.3%. As for Albertsons, ACI on the ticker down now by about 0.25%. So the Dow, the S&P, NASDAQ, they're all in the red right now, with the S&P down 38 at 49.66, drop there of 0.8%. The Dow down 81, down 0.2. NASDAQ Composite Index down 212, a decline there of 1.4%. 10-year, 4.26%, with a 2-year right now at 4.59%. Spot gold today trading higher by 0.5%, 20.27 the ounce. It is West Texas Intermediate crude that is lower, down 0.7 now, 78.64 a barrel. The activist investment firm Ancora Holdings Group has called for new management on an overhaul of the board at Norfolk Southern Corp, the railroad that is still reeling from that costly derailment last year in Ohio. Shares of Norfolk Southern today, right now they are trading higher. We've got Norfolk Southern up now by 1.1%. Among other railroads, CSX up 0.3%. Union Pacific just about flat on the day, up by less than 0.1%. Again, recapping, stocks lower, S&P down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so appreciate it. Charlie Pellet there. Well, we have felt, I feel like, Tim, this drumbeat slowly getting louder and louder over the last couple of weeks. We're talking about how investors are beginning to war game how the Federal Reserve can manage a U.S. economy that just will not land, with some even debating whether interest rate hikes will be needed only weeks after a steady run of reductions appeared all but certain. These are the words of one of the most read stories. I think it might be still the most read on the Bloomberg today.
Yeah, and speaking of drumbeats, what a difference a few weeks makes. With more on the Fed and the U.S. Treasury trade, to our key interview at this hour we go. With us, Bloomberg News economics reporter Steve Matthews, who's in our Atlanta bureau, and Bloomberg News chief correspondent for global macro markets, Liz McCormick, joining us from New Jersey. Liz, want to start with you because I want to take a step back and just think about how this debate has shifted over the last couple of weeks. Because, if we were in here 2 weeks ago, yesterday, we'd be talking about how Fed Chair Jay Powell, went on 60 Minutes and said, okay, March cut is off the table. But at that point, no one was really talking about a rate hike being a possibility.
Yeah, it's amazing what a couple weeks make. And, I will say, like hopefully we explained well in this story, what's happening now, like you guys laid out, is people are wargaming and looking at options, which are now, it's a small portion, but maybe 10% pricing. They give you the skew of where everyone thinks that there might be a chance of hikes. And like you said, Tim, people thought no way, no how. So it seems like there's been enough hot data, from inflation to the strong jobs, to people say, this kind of outlook from the derivatives market, we're going to have to price in. It's all about scenarios. A scenario, well, maybe the Fed could raise rates, let's not just wipe that off the table and make it zero. So I think that's what's happening. People are trying to bulletproof their portfolios and say, kind of, remember, options are hedges, right? What do I have to do in case things go really wrong from what I'm thinking? And I think that's what the market, really, like Ira Jersey of BI in our story smartly says, you have to, that kind of came into the table in the last week or so.
It's got to be one of the options that are out there. Steve, hang on. We're going to bring you in a moment. But I do want to say, Liz, that in terms of the debate shifting, first of all, it's like a 180 from where we were at the end of last year, where people were talking, 5 or 6 rate cuts, if you will, here in 2024. But when you have strong inflation prints like the recent CPI and the PPI and the strong jobs report for January, this all reminds us of the strength that is out there in the U.S. economy and things that have got to be on the Fed's radar.
Yes, exactly. Because, the economy, and, I think Chair Powell's made clear he would love to have a soft landing. They do not want to crush the economy if they don't have to, but inflation is enemy number one. So I think, like you said, Carol, we're just not seeing that many cracks. There's some, I won't get into the weeds of all the things people are saying on the economy, but it's not landing too hard, and we don't want that. But that maybe, in like someone, one of the investors said, maybe what the outcome is that the Fed is just going to have to stay where it is for longer. We already have the market pushed back to June for the first full cut priced in. It used to be March, and like you said, last year they were pricing in all year could be up to like 7 cuts. So I think the market is getting more in line with the Fed, who in their kind of dot plot, we call it, their quarterly forecast said 3 cuts this year, 75 basis points. And that seems like much more likely. In fact, it could be less, so we'll see.
Yeah, higher for longer. Where have I heard that one before, Liz? Hey, Steve Matthews, I want to bring you in, and I want to get to your story about productivity in just a minute, but I want you to weigh in on what Liz was talking about here, because even though investors are starting to potentially protect their portfolios from a potential rate hike next in the cycle, are we starting to hear that at all from any of the bevy of Fed speakers we've heard from in the last few days?
You're not hearing that at all. I mean, basically, the Fed officials are talking about when will the first cut be. They are pushing back against the idea of a March cut, but they are all saying there will be cuts, maybe 2, maybe 3 during the year. And, there does not seem to be any public appetite for rate hikes. And if you look at the data, the 6-month PCE inflation data is running below 2% right now. And a lot of folks on Wall Street are saying, hey, they've already met their mandate for 2% inflation. And they haven't met it on a 12-month basis, but they have on 6-month. And there's January numbers on CPI came in badly. There's no doubt about that. And that got everyone's attention, but it's only 1 month. And that's one thing that you hear from the Fed folks all the time is, you don't want to react to 1 month's data.
All right, so let's roll into, Steve, both of your stories. Liz, your story, Steve, we were tweeting out this morning. But Steve, let's get into your story, because let's roll and layer on top of all of what's going on in the U.S. economy, the strength that we are seeing, stronger inflation prints, but also gains in productivity. Give us some context in terms of the productivity gains, something that Alan Greenspan used to talk about all the time, but what we are seeing as of late and how that is maybe helping out the Fed in that soft landing scenario.
So the last 3 quarters, we've seen productivity growth of nearly 4%, which is running triple the rate that it was before COVID. And productivity is a number that is very volatile. It's noisy. So, people kind of take it with a grain of salt. However, now that you've had 3 quarters of strong productivity growth, Fed officials are wondering, is there something there maybe? You've heard that from the head of the Chicago Fed, Goolsbee, Austin Goolsbee. You've heard that from the head of the Richmond Fed, Tom Barkin, and many others that are saying, maybe there's something going on here. And the importance is, if productivity is growing fast, that means that wages can grow at an elevated rate, and it's not inflationary. Firms can have decent profit margins, and wages can go up, and it's not necessarily creating price pressures. And that's very positive. And that's the exact same dynamic that Alan Greenspan had in the late 90s when you had the revolution with the internet, with personal computers, and you had a big productivity boom. And now some people are saying this could be the roaring 2020s. That's Ed Yardeni's phrase. So, maybe we're seeing the beginning of a productivity boom.
All right, Liz, come on back in here. I don't know how much you think about the productivity aspect of this, but you look at a lot. So I do think about how, could this ultimately lead in a Fed that maybe does a few rate cuts and then eventually does some more rate hikes? I feel like we're upending what we might get ultimately.
Yeah, I think, the folks at Citigroup, the rates guys and gals, I should say, were looking at that saying, hey, this could be kind of a different cycle. Maybe we get a couple cuts. Maybe it's like the 90s where then the Fed stays still and then has to hike a little. I think that's, adding to the uncertainty of just how this is going to all go. It's very unclear. And I'm hearing that conversation kind of come back again of where's our star? The long run neutral rate, is it higher? So there just seems like a lot of variables, like in my physics days, we'd call like degrees of freedom, that people aren't sure what's going to go where. So I think, that's just leading, to a lot more volatility, and it just doesn't seem to want to go away.
Hey, Steve, come on back in here and kind of speak to that a little bit. Are we hearing Fed officials acknowledge the uncertainty to the extent that Liz is talking about here? Are we hearing them talk about how, okay, well, we don't want inflation to, we don't want to necessarily, we're not talking about raising rates again, but we want to be sure that inflation is not going to continue, or we are going to get back to that 2% rate?
Yeah, you're absolutely hearing that level of uncertainty. And in fact, you know, any number of the Fed officials are emphasizing uncertainty and saying uncertainty is elevated. And, you know, one reason that it's elevated is that with inflation, it is coming down. The headline numbers are coming down. The core numbers, excluding food and energy, are coming down. But the breadth of the disinflation is not quite there. I mean, you've had falling energy prices, falling goods prices, but services, the services sector is still seeing fairly high prices.
Right.
And that's a concern.
Hey guys, last question really quickly. Liz, to you first. I feel like if anything I've learned again over the last couple of months is that the thinking, the narrative, how markets see things can change very dramatically depending on the data flow. Is that fair that this conversation we're having could possibly change in a couple of months in a big way?
Yeah, absolutely. I mean, if we've learned anything over the last couple of years, that's it. You know, what seemed like, you know, going to be happening, no way, no how, anything else. In a few months, we're talking singing a different tune. So I think for sure we don't know how it's going to all unfold.
Steve, you concur?
Absolutely. And I would watch carefully the jobs numbers and the CPI numbers, particularly for the next month.
All right, good stuff to keep on our radar. And you guys are always good to have on our radar whenever you write anything. So thank you, thank you. Steve Matthews, economics reporter at Bloomberg News out there in our Atlanta bureau. Liz McCormick, chief correspondent for global macro markets at Bloomberg News out there in New Jersey. They are among the most read stories on the Bloomberg today. And Tim, we've got another one that is among our most read, but it's on the equity side of things.
Yeah, shares of Walmart higher by 3.73% right now, catching everyone's attention today. Earnings from the world's largest retail. Shares of Walmart earlier in the session soared to a record, moving the most since November of 2022. This after topping earnings estimates in the fourth quarter. Also confirming reports that we saw last week that it's buying smart TV maker Vizio for about $2.3 billion, Carol, in a deal that would accelerate the retailer's advertising business, which is called Walmart Connect.
Our Paul Sweeney earlier on radio talking about how it's kind of following in the steps of Amazon and what it's doing. So let's get to it, and let's bring in our Bloomberg News earnings reporter, Red Brown. Red, the stock is soaring. It's off its highs, but as Tim mentioned, still up just shy of 4% today. Why? We had a batch of news. We had earnings. We also had a deal. How are you thinking about Walmart today?
I think the results kind of speak for themselves, and it's a little bit of a relief, I think, for a lot of investors to see still growing the top line and also outperforming from the bottom line, too. They beat their earnings per share estimates by around 9%. So overall, I think the message that investors are taking away from this report is, yes, shoppers are picky, but they're still shopping, right? So that's the biggest headline, I think, for a lot of people.
I also thought one big takeaway, Red, was what we heard from management on the call, which is, hey, we're no longer thinking about a recession, and actually customers, they're feeling pretty good right now.
Yeah, look, they're like the recession that didn't really materialize, I think, is basically what Walmart is saying. And yes, they still might be shopping in these lower margin categories, so they're not doing, you know, those big purchases. That still kind of is in the details of the report, but they're spending, and they're comfortable spending. They're actually spending at higher volumes too. So that's playing out because of some of the price decreases that Walmart has pushed through across its market space there. So yeah, I think the strategy for Walmart is working, and yeah, positive signs ahead.
Well, and it's always positive, right? That even if consumers are being careful, they're coming into the store and coming in more frequently, which then opens the door, right, for them possibly to maybe ultimately spend more, depending on kind of their mood and what they're feeling in terms of sentiment.
Right, and I think that's some of the rationale for the deal, for the Vizio deal as well, is, look, we're growing our consumer base. It's already one of the biggest in the world, and we're continuing to do that because we can offer the lowest prices. That helps with the advertising business, helps kind of sustain a little bit of a higher margin, consistent consistent revenue line for Walmart as well.
Ad dollars in Walmart, you gotta love it.
Yeah, okay, let's end on the Vizio deal. $2.3 billion read. We talked about advertising, we talked about data. What sticks out to you from the deal?
I think it's just more of this theme with Walmart that they are no longer just a big box retailer. They are trying to sort of follow Amazon, like we were speaking about earlier, and also kind of taking on other tech giants. And I don't really want to think of Walmart as a tech company, but some of these moves that they're making, be it Walmart Connect, Walmart Plus, getting into streaming potentially, going head to head with Roku with this Vizio deal. I just think it speaks to kind of a dynamic environment for Walmart.
It's
they want to be thought of as a tech company, no question. They want investors to think of them as a tech company.
It's like years of efficiency, right? We heard that from Mark Zuckerberg, but it's also about years of kind of evolving, right? And kind of shifting in terms of strategy or taking on new things to drive growth. So really cool stuff. Thank you so much. Really appreciate it. Bloomberg News earnings reporter Red Brown. Shares of Walmart up just about 3.7% off their highs, but nonetheless gaining. Hey, we talk about companies shifting. We got a company on our radar with that. We're talking about Weight Watchers. We're going to take you into the GLP-1 hype house. Ooh. That story also among our most read. It's coming up next, everybody.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street eagerly awaiting NVIDIA's earnings due tomorrow after the close of trading for confirmation that the stock can meet sky-high expectations set by the boom in artificial intelligence. NVIDIA shares down now by 5.3%. Big tech lower across the board. S&P down 37 points now, a drop of just about 0.8%. We've got the Dow Jones Industrial Average lower now by 89 points, a decline of 0.2%. NASDAQ lower by 212 points, down 1.3%. The 10 years at 4.25% with a 2-year that's yielding 4.59%. Spot gold higher by 0.5%, $2,027 the ounce, while West Texas Intermediate crude is down 1.8%, $77.79 a barrel on WTI. Walmart topped earnings estimates in the fourth quarter. Today we do see Walmart shares advancing. Walmart shares up now by 3.5%. Also reporting earnings this morning. Home Depot, that stock also higher, up by about 0.2%. Again, recapping, U.S. stocks are lower. Spot gold, as I mentioned, up 0.5%, $2,027 the ounce, with the S&P down 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie's been all over this story, and it is a deal actually, two companies now ranking as they come together as the biggest merger globally this year. Bloomberg was first to report the deal, Capital One Financial agreeing to buy Discover Financial Services in a $35 billion all-stock deal to create the largest U.S. credit card company by loan volume, giving the combined entity a stronger foothold to compete with Wall Street behemoths. I mentioned, I kind of jumped the gun, Senator Elizabeth Warren, we talked about this earlier with Joe and Kaylee, already calling for this deal to be blocked, Tim.
Yeah, so let's get to what we all need to know about the deal and the deal's potential impact. With us, we got Bloomberg News deals editor Matt Monks. He's here in the studio with us. Also, Bloomberg Intelligence consumer finance analyst Ben Elliott is in our Washington, D.C. bureau. So, Matt, first up on the deal, you and Leanna breaking it all down as it came down. A big one, the biggest globally thus far. Also a decent premium. Give us the numbers, give us the details.
Yes, so Capital One, which is the 9th largest bank in the U.S., is agreeing to buy Discover for about $35 billion. It's a 27% premium. The deal is expected to close later this year, early next year. That's the big question, whether it gets across that finish line. And basically, this is all about the rails. It's all about the network. Capital One is a card issuer, and now it's taking over the smallest card network in the United States.
It's interesting, and it kind of a million questions. I mean, Ben, come on in on this. I mean, what are the benefits to these two companies by doing it, and then who loses out in this deal?
Yeah, so I think the question here is not really whether a Capital One Discover tie-up is going to outcompete Visa and MasterCard. It's sort of whether can Capital One become the next American Express? Can they grow the Discover network? Can they bring competitive credit offerings to that network in a way that gives them more negotiating power with merchants and gives them a revenue stream that's not based on credit?
What can I just, Tim, you and I were talking in the newsroom, you're like, I don't even know this many people use Discover. I mean, Ben, I have family members who love Discover.
Hold on, just because I said it to you in the news, you don't have to tell everybody I said that,
But
Carol.
It's fair. Like most people, it's Visa or MasterCard or it's American Express. The value that Discover brings to the table.
Yeah, so Discover it's not really well understood, I think, by sort of a broad swath of American consumers. But
so you're not alone, Tim.
Thank you.
Go ahead, Ben.
But Discover's acceptance is basically as broad as Visa, MasterCard, and American Express. They advertise that at 99% of places where credit cards are accepted, you can swipe your Visa card. So if you apply that sort of wide acceptance, I mean, that's like a gritty sort of merchant-to-merchant battle that Discover has fought for 40 years. And now Capital One is looking at that and seeing all the hard work that's gone into it and seeing a relatively attractive acquisition point. And they're saying, maybe we could take this to the next step and become sort of like the next American Express.
So Ben, is this about reducing Capital One Financial's reliance on Visa and MasterCard, like pushing them out of the picture completely, and at one point in the future, exclusively using Discover as the card issuer?
That might be a very long-term goal for Capital One management, but I think the reality is in the near and medium term, they're going to keep issuing Visa and MasterCard branded credit cards for quite a while. And I think that you'll see sort of most of the synergies in the deal are going to come on the debit side first, where Discover has a competitive advantage versus some of the other networks. And so I think that Visa and MasterCard are are, they're a little worried. It could be transformative in the long term, but for now it's sort of in the mid to low single digits impact.
Matt, come on back in here. And as the deal was coming down, you and Leanna were reporting on it. As we said, the combination will surpass JP Morgan Chase and Citigroup by U.S. credit card loan volume. How are you thinking about the size of the deal in a year where we are seeing a fair amount of activity happening in the M&A space?
Well, we're coming off a bad year for M&A, so this bodes well. You saw $50 billion in just financial transactions announced today, which has almost never happened, ever, regardless, even coming off of the boom years. So it's a very large transaction that bodes well for more activity to come. And one thing about this specific transaction that I want to keep in mind, it's still a relatively small player in the credit card network business, and it's still going to be dwarfed by the big three. So actually, within the scheme of credit card networks, it's not that big.
So were you surprised then, Matt, to see Senator Elizabeth Warren come out and say that the deal should be blocked? Here's what she said. Capital One Financial's $35 billion deal to acquire Discover Financial Services threatens financial stability, reduces competition, and raises costs for